Okay, let's start because anyway, let them, if they are getting late, they can watch the recorded version, right? So we are looking at today, now the trade part we fully covered, possession we fully covered. Now we will be looking at all these foreign currency accounts and the Foreign Exchange Act that has been enacted in 2017. After that, what are the types of foreign currency account that could be open and how it operates? And there had been a revised version in last year, March. They brought some all those directions revisited, and those changes we will be looking into. So remaining sessions will be focusing on mostly on this Foreign Exchange Act and the accounts that are permitted, and there are practical scenarios, issues we will be discussing, right? So let's move on to uh, Foreign Exchange Act, right? So uh, the learning objective end of the session, you should be in a position to know, okay, what is this Foreign Exchange Act, why it was introduced, the importance, right? So we will be once you have the presentation completed, you are in a position to know, okay, why that it was implemented, why the new act enacted in the parliament, and its importance, right? And the definition of resident and non-residents, the act defines specifically who is resident. Then we know who are the non-residents subsequently if we categorize residents. So we are going to learn who is resident and who are those non-residents, right? Then type of different foreign currency accounts and its eligibility. Okay, so we are going to look at what types of foreign currency account that could be open. So we will have a glance under the previous Exchange Control Act. There were so many accounts that were permitted to open. Now that have been uh, uh, streamlined and minimized very precisely. The foreign currency accounts are now being categorized. So we will look at those accounts and what are those permitted credits and debits under each account. We will look at it. That is very critical. That is what we are focusing today. So there will be two major accounts we'll be focusing. All the permitted credits and debits. It's not very important key ones. You need to look at, if you are working in the foreign department, you should be in a position to know each credit stand for what, right? And each debit means what, right? So you should be in a position to understand and explain and should be aware of, right? Then foreign currency loan facilities granted to Pfca holders, BFCA. We will learn what is Pfca, BFCA during the sessions. So we will go through that. Inward investment into Sri Lanka, its opportunities, and permitted outward investment. So let's see if a time permits, we will go through that as well, right? So that is how we structured the learning objective of today's session, right? So as you know, you are aware, the Exchange Control Act enacted in 1953 was in use till 2017 November. So almost 64 decades, more than 6 decades, the Exchange Control Act have been used. So during the tenure of this act was in force, there had been so many issues were surfaced, and timely central bank managed to, within that act, they managed to give provisions to introduce new accounts, right, rectify certain issues. But the act, when you say Exchange Control Act, when you have the word control, that doesn't sound positively when somebody looking this region as an investment opportunity. Says there are foreign direct investment looking at our region. So when they know there is exchange control in place, the word control gives a bit of a negative message. They have the feeling, if once they invest the money, whether they are in a position to take the money back. That kind of a feeling when you say controls. So that is the reason there had been so much of emphasized on the government to revisit this exchange control and replace other sets of law as a rule and then implement. So that is how the Foreign Exchange Act have been enacted in 2017. So you could see last 64 years, since 53 to 2017, Exchange Control Act was in use. So that was replaced by Foreign Exchange Act in 2017 November. So the effective date of this new act on the 20th of November 2017. That is the date. So you could see exchange control. That is the word they want to get rid of. So therefore, Exchange Control Department also has been renamed as Department of Foreign Exchange. You can see the logos are there. That's how it's structured. Department of Foreign Exchange, right? So the name has been changed. Then the person who's heading the division is called Controller of Exchange. So that has been redesignated as Director, Department of Foreign Exchange. So you could see some of the good changes have been done. Exchange Control Act have been taken off, replaced by Foreign Exchange Act, which is very decent. It says Foreign Exchange Act. There's no restriction as such, nothing there. Looking at the visibility of act, there is no control. So it gives a neutral picture to the investor's perspective when they look at making investment into Sri Lanka, right? So they have a foreign exchange act very decently. The word itself suggests a moderate and positive way of looking at. Then the foreign exchange regulation have been revised. Yes, this foreign exchange act came into force in November 2017. These directions have been revised when they start using, because what happened is whenever there is a new act is enacted, when they start using, there could be certain issues which may crop up. So that is the reason after 4 years time in 2021 March, they have issued revised direction. Under the same act, the revised directions are issued, right? So we are going to look at based on the revised direction. That is the enforceable direction as at now. So we will be looking at those directions. So, okay. Then we should know, okay, why it's important. The Foreign Exchange Act, why it is important, right? So you should know why it is important. Okay, it is important that when you look at the Exchange Control Act, that has so many accounts that were permitted to open, right? That's very old act, right? In 53 mean it's very quite old, right? It's more than 60 years, more than 64 years, right? So that act, during that period, it was prepared. There are so many changes to place, the way of doing businesses, the way of liberalizing foreign exchange regulation globally, and you should have transparency, you should have streamline in those operations. That is the reason the Foreign Exchange Act have been enacted. So the importance of enacting Foreign Exchange Act, it's simply precise definition given for each type of keywords, right? When you say resident, what is the clear definition? But under the old Act, Exchange Control Act, there's no precise definition. There had been a definition, but it was not very precise. As a result, banks were taking their stance based on how do they feel, because since the definition is not very precise, that have been addressed very clearly under the new act. So you could see resident is very precise. So we will look at what is the definition of resident. So the each and every factors has been clearly defined. That is one of the importance of new. Then foreign currency accounts have been simplified. So we could learn now. We are going to look at certain accounts which you could see under the old act. There were so many other accounts were operated. So under the new act, what are the new accounts? How simplify this process, right? And permitted transaction have been clearly articulated and defined. So now we don't have any ambiguity. We don't have any doubt, right? It's very clear. Now with that, the transaction will be smoothly taking place. There's no problem. Everybody can interpret that because the act is very transparent. So people can take action based on the act, right? Based on the direction issued under that. So you can easily make a decision based on the information available. Is very precise. So ensure smooth and transaction. As a result, the foreign exchange inflow liquidity will flow into the country. That is especially foreign direct investment. Higher transparency, yes. Removal of criminality, yes. Under the exchange control, when you have a control, you can't violate the control. If you are violating the control, then it will kind of a criminal offense. But here, Foreign Exchange Act that have been taken off, it will be kind of a penalty imposed by the central bank, or whatever the offenses committed by any individual or authorized dealer banks, there will be penalty imposed by the regulator, right? So if you are a aggrieved person, say you are an affected party, you still have a option to go and plea for a appeal process, and there will be board of inquiry nominated as per the act. They will give a resolution. So that feasibility is there under the new act. So these are some of the key areas, or the rather important factors in the new act. So there had been a provision of amnesty. Amnesty also there. The amnesty means the people who have kept foreign exchange earned outside Sri Lanka, they can bring back those money, even though they have not declared to the Commissioner General of Inland Revenue or head of Foreign Exchange Department. These funds were not declared, but still they are now permitted to bring back. Of course, there will be remittance fee of 1% will be charged if the amount is exceeding $1 million. So people who have kept their foreign exchange earning outside Sri Lanka are now permitted to bring back, because there is an amnesty given. Amnesty means there is a pardon. So those people, though they have been unofficially kept the money without declaring to the Inland Revenue as a taxable income, they can bring back the money. So they have been given general pardon. Amnesty means general pardon given to those people. Okay, now you can bring back. There is no penalty. There is no prosecution or penalty will be imposed to such persons. So they can bring back the money, right? So that is also there, right? So these are some of the key factors in the Foreign Exchange Act. So the objective and the way forward of the Foreign Exchange Act, right, is to make sure the foreign exchange transactions are efficiently done. When you say any transaction, it could be trade, it could be service related, any cross-border transaction, have a great efficiency, because everything now very precisely done. Definitions are well articulated, very well defined, precise. You know what is this, what is the permitted debit, what is the permitted credit. There is no ambiguity, there is no doubt, right? Everything very clear. So people can carry out foreign exchange, especially banks, do not have any issues, right? So they have been permitted to carry out transactions. Of course, you also should understand under the new act, if a bank is not willing or not in agreement with to effect the transaction on the customer's request, uh, they can refuse, right? So if the customer is not providing required documents, what is requested by the bank can decline the transaction. But the customer has given a kind of a provision where he can ask the bank, give me in writing why you are unable to do this transaction. So it was not the under Exchange Control Act, but under the Foreign Exchange Act, the bank is supposed to give something in writing when the customer is requested why his request has been declined by the bank. So the bank is supposed to give a letter on what reason they are not supporting this transaction, right? So the bank is supposed to give something in writing. So the customer can take it up with the regulator, the central bank. Central bank overrule it, or central bank might say, okay, you may have to give these documents in order to proceed this transaction. Whatever the regulator takes the view of what is right, is the regulator's stance. As a bank, if you're unable to do a transaction, remember, as a bank, you are supposed to give something in writing. If the customer requested only, you can't say there's no requirement for us to give it. No, the act provide provisions. Bank is supposed to give something in writing to the customer when they are declining the transaction. Maybe insufficient documentary evidence. Maybe the transaction is not very clear, not very precise. So you have all the right, as authorized dealer, you have all the right to decline. There is no hard and fast rule. Every transaction customer refer is to be done. No, you need to be justified by going through the documentary evidence, right? So there is a provisions, right? Of course, there are so many stakeholders: government, authorized dealers, investors, uh, account holders. All these people are stakeholders. So they have a greater convenience when the regulation, when the rules are very simplified. So that is the other looking forward or way forward to execute the foreign exchange transaction. So these revised version, the revised direction came into force from 22nd of March 2021. So all the accounts that we are going to look at now are the latest version. That is the foreign exchange revised version as per 22nd March 2021, last year, right? So you should know, okay, what is the act now? Exchange control is no more there. Foreign Exchange Act came into force in 2017. Directions were issued with effective from 20th of November 2017. Thereafter, central bank has further released certain direction, removing the direction issued under the Foreign Exchange Act in 2017, and 2021 March they issued other sets of new direction under the same act, Foreign Exchange Act. So with that, we will move on to the first definition given under the Foreign Exchange Act. Who is resident, right? So under the Exchange Control Act, a permanent place of resident or permanent place of abode, it's resident. That is the definition under Exchange Control Act. That gave a lot of problems, right? That gave a lot of issues, cropped up a lot of issues when we started interpreting who is resident. Especially the people having a dual citizen had a lot of issues, right? That was totally eliminated under the Foreign Exchange Act. Now there is a precise definition who is resident, right? You and me are resident because we are remain here forever. Or when I say forever, there is 1 or 2 year, 3 year, 4 year, any number of years you and me are going to be here. So the first category, any citizen of Sri Lanka, including a foreign country, a person from a foreigner can marry to Sri Lanka. Let's say a gentleman, a foreign gentleman can marry to a Sri Lankan lady, or a foreign lady can marry to a Sri Lankan man, right? And if they are remain in Sri Lanka eventually for more than 183 days, that such person also will be treated as a resident because their permanent place of abode after marriage going to be here. If they feel they are going to here, then those person will be resident. So any resident, you and me, or even a foreigner married to a Sri Lankan, if those people are, the spouse is remain here, the foreign spouse is remain here, they will be treated as a resident, right? So the resident definition, everybody who remain here is a resident, simple as that, right? Including foreigners. Then who proceeded outside Sri Lanka, temporary holiday, education, business. So anybody leaving Sri Lanka who is going outside Sri Lanka for holiday or education or seminar or business or medical treatment, where you will be coming back to the country within 182 days. You are not going to stay more than 6 months any country. When you go on a temporary visits, you come back to Sri Lanka. So you are a resident. Though you are physically not here for 6 months or less than 6 months, you will be treated as a resident because you will come back to your own country, right? Those people are also residents. So remember, if a Sri Lankan going for a trip to Dubai, coming back, so while he's in Dubai, how do you treat him? He's a resident. He's holding Sri Lankan passport. He's a resident. He will come back to Sri Lanka within 182 days. So very precise, very clear. We know who is resident now, right? Then look at the third one. A student visa or equivalent visa granted to person to study abroad, right? And that person will be, when he on a student visa or equivalent visa outside Sri Lanka to pursue education, treated as a resident. So the time frame given them is once they complete the education, they should come back to the country within 182 days. Once they complete the education. So remember, if a student goes to Australia, he do his degree program, then he want to do the masters, right? He remain there. After masters, when he intend to come back here, after completion of study, if he come back here within 182 days, he is a resident. So until such time, when a person is studying overseas, whoever with a resident visa, you simply treat them as a resident. The cutoff time is after their completion of studies, they come here. Suppose there are people who go to Australia or who go to UK or Canada, they study and then they apply for a temporary resident visa there, then they remain there as a permanent. So those people definitely will not considered as a resident because they have not come back after their education. Within 6 months, if they come back only, they are resident. Otherwise, they are non-resident. So they will be taking a permanent resident over that country. So there are people who have gone outside Sri Lanka for education, they don't come back. So those people will not be treated as a resident because after the education, they are not come back. They are on a different visa category. So we are talking about resident here, student visa or equivalent visa. So the moment they change the visa resident to temporary visa, they are no more resident. So those people will be considered as a non-resident. So you should know, right? Then again, a diplomatic representative, council, or I think you know, right? These are Sri Lankan people who are holding government official position in other countries. So say I Commission, Sri Lankan I Commission sitting in India, or there is a trade ambassador from Sri Lanka representing in Japan, a Sri Lanka consular in Dubai. All these names suggest, right? Diplomatic, consul of trade, commissioner, all representing the government. So, okay, those people carry whatever the title when they are resident outside Sri Lanka. Remember, since they are holding official capacity, though physically they are not in Sri Lanka, still they are treated as a resident because they are representing the government. Therefore, they are resident. So you should know, okay, any diplomatic person, diplomatic mean is representing the government. That is what you call diplomatic representative, or you can say High Commissioner. So every country has High Commissioner. Let's assume that Sri Lankan High Commissioner in USA. Though he is in USA, he is treated as resident, right? Why? They are on a different visa, diplomatic visa. They are representing Sri Lanka. Though they are physically not in Sri Lanka, still they are resident. So these are exceptions, right? So you should know different category of resident. It is not only you and me are resident. There are other people who are studying abroad, resident, who are doing government capacity, holding government position in other country. They are resident, right? Okay. Institution incorporated or registered in Sri Lanka, irrespective of, any businesses registered here, having open office here, incorporated here, under the Company Act or under the partnership, under the sole proprietor, all that business are resident. So that is very simple, right? Any business registered here, having a business office here, all resident. Okay, all that businesses, all that offices, everything registered in Sri Lanka are registered. Though sometimes the owned by foreigner. Irrespective of whether it's owned by foreigner, if the business is registered in Sri Lanka, that is resident. So there is other definition, right? So resident, the other category of, not other definition, there's other category, the entities, right? Government of Sri Lanka, including government corporation, government institute, any government body, any government corporation, whatever ministry, all that have, they are based here in Sri Lanka. Those are resident. So they are giving under the resident, they are defining each and every category could be treated as a resident, right? Then citizen of foreign country. Now, very carefully listen. Citizen of foreign country who are resident in or employed in Sri Lanka under relevant visa. Okay. So you must now understand there are foreigners who are in Sri Lanka with resident visa. If I give you an example, if you take some of the 5-star hotel, the main chefs are Indian, some of them are in Middle Eastern countries, right? Those people are the chef. Or you may take Lanka Hospital, formerly known as Apollo Hospital. That Lanka Hospital has most of the Indian doctors. Initially, when they started Apollo, most of the Indian doctor working at Apollo. It is one of their subsidiary, Apollo in India. They have a branch office here. Subsequently, that have been taken over by the government. So now it goes as a Lanka Hospital, right? So there are doctors who are working in the hospital. Those doctors will have a resident visa, renewable resident visa. So they are treated as a resident because they are on not a temporary visit. They are on a resident visa. If any foreigner comes to Sri Lanka on a temporary visit, he is not a resident. because he is not meeting the criteria to remain here for 182 days. Then he is not a resident. If anybody remain here more than 183 days with a resident visa, you can treat them as a resident. So any foreigner who are here in Sri Lanka on a resident visa, either doing business or working, could be treated as a resident. So is that clear? So you know the different category of residents. So you can see how simplified, how precisely they are defined, the residents, right? Citizen of Sri Lanka who are employed on a Sri Lankan ship during the period of individual is also employed. So you can see the crew members, Sri Lankan crew members working for Sri Lankan ship. Though the ship is not sailing in the Sri Lankan water, it may sailing in the overseas water, right? Still, it is belongs to Sri Lankan vessel. Ship belongs to Sri Lanka. So those crew members are Sri Lankan. So those people are also treated as a resident. Though they are physically not in the island, they are outside the island, still treated as a resident because they are working for Sri Lankan ship. So you now know, if anybody holding government capacity, working for a Sri Lankan vessel or working for a government, though they are physically working outside, those people all are treated as a resident because they represent government, right? Individual who are citizen of Sri Lanka or Sri Lankan origin who do not satisfy. Yes. Now, central bank, when they given the definition of resident, they have given a deeming provision. That means they said, okay, all are resident. We are defined. There is one category of people, for the purpose of opening an account called personal foreign currency account, you treat them as a resident. So if I simplify, say a Sri Lankan person migrated to Australia, it's a Sri Lankan origin, now living in Australia on PR, or he has changed the citizenship. That means he has taken Australian passport now. He's an Australian citizen totally. Now that particular person, since he's a Sri Lankan origin, just to open the Pfc account, central bank suggested. Actually, that person is a non-resident, right? For the opening of Pfc account, central bank has given permission, treat that particular person as a resident only to open the Pfc account. So only to open the personal foreign currency account we are treating, but not in other terms. He is a totally a non-resident because he is not here in Sri Lanka. He has been in Australia, though he is origin of Sri Lanka. For that purpose, central bank said, okay, though he is a non-resident, for the opening of personal foreign currency account, that particular person has been treated as a resident, right? Only for, it's a deeming provision, only to consider him as a resident, only to open a Pfc account, right? So though actually he is not a resident, he is a non-resident. So now you know who is resident, who is non-resident. So in simplified, anybody remain in Sri Lanka, you and me, we are going to remain here, everybody treated as a resident. If anybody doing official capacity, representing government in any other countries, whatever the name, Commissioner General or High Commissioner, whatever you may name them, those people are treated as a resident. And there are people, foreigners who are coming here with a resident visa, treat them as a resident. And the students who are gone outside Sri Lanka, they are studying education visa, those people are treated as a resident. And Sri Lankan people, temporarily they are going to a tourist, as a tourist going outside and coming, all those people are resident. Any businesses registered in Sri Lanka are resident. Any government institution registered here are treated as a resident. Anybody working for Sri Lankan ship are treated as a resident. All these people are treated as a resident, right? So now you have an idea who is resident. Anybody who doesn't fall under this resident category, simply treat them as a non-resident, right? Suppose say I was telling you, anybody who is going under education visa to abroad, Sri Lankan student going abroad and coming back after completion of studies within 183 days. After completion of studies, say let the particular person complete a study and he has applied for a temporary resident in that country. So he is not a resident now. He is a non-resident. So now you know how to categorize resident, how to categorize non-resident. Because that person is not on a student visa now. He changed the visa to temporary resident in that country. He may subsequently change it to permanent resident, PR. Or he may change it to citizenship. There are three ways of doing temporary resident, permanent resident, then the citizenship. This is how the general process. Once you have the citizenship, you are totally a foreigner now. Though origin of Sri Lanka, for the purpose of opening Pfc account, you will be treated as a resident, but you are totally a non-resident. Is that clear? Okay. Now we are going to look at foreign currency account under the Foreign Exchange Act, opening and maintaining of foreign currency account. So let us look at few accounts. So you can see there is an account called personal foreign currency accounts. So the new account called personal foreign currency account. It is the amalgamation of, under the Exchange Control Act, there had been 4 different accounts. RFC, NRFC, RNNFC, NRNNFA. There were 4 accounts, all meant for individuals. So there were a couple of accounts. So what happened? Central Bank, under the Exchange Control Act, they gave the approval, any resident can open a foreign currency account. Then what happened? The people who are working in other countries, Sri Lankan working in Middle East, so Sri Lankan working in any other country, those people also wanted to open a foreign currency. So Central Bank gave the permission. That became NRFC, non-resident foreign currency account. Then what happened? There are foreigners who are coming here with a resident visa. As I told you, the Apollo Lanka Hospital doctors are working. They are getting their salary in dollars. They also wanted to maintain a foreign. So Central Bank gave them a permission under the Exchange Control Act as RNNFC. Then there was other account Central Bank gave the permission under the Exchange Control Act called NRNNFA, non-resident, non-national foreign currency account. That means the foreigner is not here. He's a non-national foreigner, non-resident, not here, non-national foreigner. He wants to open a foreign currency account. So they gave the permission. That means people who are intending to come to Sri Lanka later, or they come on a temporary visit to Sri Lanka, those people are also permitted to open under the Exchange Control Act. So Central Bank, when they revised this Exchange Control Act into Foreign Exchange Act, they amalgamate all those 4 accounts put together. They now categorize account called personal foreign currency account. So if year in after, if anybody is saying I have RFC account, I have NRSC account, I have a RNNFC account, or I have a NRNNF, these accounts are not in existence anymore. It is the only Pfca account that is in currently operated. These 4 accounts are no more, right? Likewise, there has been another account called business foreign currency account. This is the people who earn foreign exchange by supplying goods or services. The people who earn by giving goods, by selling goods or services to foreigners, to non-nationals. Right, those people are permitted to open business foreign currency account. Earlier, there had been 3 different accounts Central Bank permitted under the Exchange Control Act. Those accounts were foreign exchange earners account. Don't worry about this account. I have the next slide giving you the details of these names of the old version of accounts, right? Foreign exchange earners account. Then inward remittance distribution account, IRDA stand for. Then you have account for foreign currency account for agent of foreign shipping and airlines. That is the other account there. They put all 3 accounts together. They formed an account called business foreign. So now you have simply 2 accounts. Individual person can open personal foreign currency account. Even individual person and any businesses can open business foreign currency account if they are earning foreign exchange, right? Then there are other 2 accounts, inward investment account. That means people want to invest into Sri Lanka. Earlier, there had been 2 different accounts, security investment account, special foreign deposit account. These 2 accounts merged together and called inward investment account. Then there is another account they introduced, outward investment account. So these are the major categories of account, 4 type of account. So now you under personal foreign currency account, there are 4 different types of account. Now let's see the names of that. Yeah, RFC stand for resident foreign currency account. NRFC stand for non-resident. So you can see earlier residents are permitted to open foreign currency. You and me can open under RFC. Now what is the account? Now Pfca. Earlier Non-resident foreign currency. Who is that? Sri Lankan working in outside Sri Lanka. They are non-resident. They are working. So those people are permitted to open NRS. Now you can understand why central bank said just because of to open a PFC account, that is because these people are there. Under personal foreign currency account, now you have categorizing different 4 type of account you are merging together, right? When you are merging different type of account, you should have a reason why non-resident have been permitted to open a PFC, because those people are Sri Lankan. They are working in other country, right? They are on a employed visa. So those people should be permitted, because earlier they had been permitted to open NRSC. So under the Foreign Exchange Act, they should be somewhere, they should be accommodated. So those people are now accommodated under the personal foreign currency account, right? So you know RFC, NRS. You can see the other account, resident non-national. That means resident visa. They are foreigners, non-national. Example, Indian doctors working at Lanka Hospital, right? Or chefs working in 5-star hotel, foreign chefs. They are on a resident visa. So you can treat them as they are non-resident. I'm sorry, they are resident, non-national. They are foreigners, non-national. They have been given on a resident visa. So those people can open RNNFC. Then I told you NRNNFA. What is that? They are non-resident. They have not come here as a resident. They are foreigners. They also can open account. So you must be wondering, what is this account, right? There are people who want to come into Sri Lanka, or they would have come here with a temporary visit. Then they want to immediately open account. So those people also should be given permission. They are on a temporary visit. They are not a resident, because that's what you can see, they are non-resident. When a person, foreigner, come to Sri Lanka on a temporary visit, he's not a resident. He's a non-resident. So he's permitted to open account. So non-resident, non-national. He's a foreigner. He wants to open. So those people are also permitted. So these 4 category, you can see here, personal foreign currency account. So you can see RFC, NRFC, RNNFC, NRA. All these 4 accounts treated as personal foreign currency account. You can see under business, they have a 3 account. Pfca, IRDA. So what is Pfca stand for? Here you can see foreign exchange earners. You have to earn. Those are business. You are earning. Or inward remittance distribution account. There is a account where the Sri Lankan businesses can distribute salaries of crew members or people working in the aircraft or ship to pay their salaries. So that distribution account also permitted to open a business foreign currency. Earlier there was a separate account that is called inward remittance distribution account. Then you have account for airline and shipping. The account title goes as foreign currency account for agent of foreign shipping line and airline. So shipping line and airlines are also permitted to open. So these 3 categories are now considered as business foreign currency account. These people are earning foreign exchange. So you know now personal foreign currency account, amalgamation of 4 account under Exchange Control Act, business foreign currency account, amalgamation of 3 different accounts under the Exchange Control Act called Pfca, IRDA, Pfca, ASA. Then inward investment account, that stand for SIA, SPDA. SIA stand for Securities Investment Account. SFIDA stand for Special Foreign Investment Deposit Account. I have prepared this slide for you to better understand. Otherwise, if I give this wording only, you might not know what is RFC stand for. So now you know, looking at the next slide, you know the abbreviation. Each account abbreviation, RFC stand for what? You know in the next slide, it's the full name is given. So now you have clarity to identify resident, non-resident, right? So now you know the accounts, right? So we are moving on to this direction. Before we moving on to each account, under this direction, there are certain definitions. So that is one of the key factor. That's what I said Foreign Exchange Act is important, because they are defined each and every category. So there is something called immediate family member. So when we talk about permitted debit and credit into this account, you will come across a wording called immediate family member. What does it mean? When you say immediate family member of the account holder, mean the account holder's spouse. If the husband is opening the account, the wife and his children and his parents, all three are immediate family member. If a ex is maintaining account, ex-wife is immediate family member because his spouse, his own parents, his children. These three categories are considered as immediate family member. So if you but when you are looking at the permitted credit debit, you will come across the word called immediate family member. You should understand immediate family member mean the account holder's spouse, children, parents, right? Then remittances. So we will when we look at debit credit, remittances. Remittances mean the payment made through the banking channel. Okay, let's say telegraphic transfer, or what is TT, telegraphic transfer, right? I think we learned that. Other interbank transfer, fund transfer, maybe exchange houses, exchange houses, exchange company in Middle Eastern countries, there are exchange houses, right? These are kind of a lesser version than the bank. They are having a small office where they do the money change, like in Sri Lanka you do the money changer. Likewise, in Middle Eastern country, you have exchange companies. So those people, those institutions facilitate foreign. These countries, most of the foreign people are working in those countries. If you take Middle East countries, lot of expatriate workers are working there. So when they want to remit money to their dependents in other countries, they go to these exchange houses because the process are very simplified, not like bank, right? That doesn't mean they compromise the regulation and all. They have a certain amount of responsibility to obey the guideline issued by their central bank, respective central bank. But the exchange houses are very small operation, so the money can be come through the exchange houses also, right? So that is every right of payment coming into Sri Lanka, going out of Sri Lanka, considered as a remittances. So you should understand what is the meaning of remittances: payment that have been going through the banking channel or exchange houses. It can be telegraphic transfer, it can be bank draft, or any other payment instrument, or coming through exchange houses, right? Or online payments. All that is comes as a remittance. Foreign currency mean other than Sri Lankan rupee, any currencies are foreign currency. Other than Sri Lanka currency, any currency is foreign currency. Foreign currency account meaning account in licensed bank, any foreign currency account maintained with authorized dealer. So that's what we are going to learn now. Current transaction definition mean any payment. There is no limit for current transaction. There is no limit, right? But remember, those payments should not connected to movement of assets. Capital asset, when you say asset, real assets, financial asset, real assets, right? Real asset means land, building, okay, that kind of real assets. Financial asset, it's securities, investment, buying treasury bill, buying investment, buying bonds, right? All that is investment. So when you are making capital assets, any transaction not related to capital asset considered as current transaction. In simply, you can consider any transaction related to goods and services are current. Any transaction related to goods and services are current transaction. So that is the definition, current transaction. So remember, in central bank regulations, current transaction means not movement of asset. Any transaction without any limits, without involvement of movement as assets, totally considered as current transaction. If you are buying goods or services, simply it is current transaction. So that is the definition of current transaction, right? Okay. Then okay, so you can see okay, so let us move on to the first category, personal foreign currency account. So now we are going to look at who are the people permitted to open personal foreign currency account. Earlier on the Exchange Control Act, there were 4 different type of accounts: resident, non-resident, non-national. Now all those 4 people should be here. Otherwise, how can those people continue their account? Then central bank has to permit them. So that is the reason under personal foreign currency account, you can see different eligibility criteria are there. What are the eligibility criteria? An individual, including minor, who is a Sri Lankan. So you and me, including a child below 18 years, can open a Pfc account. There's no problem, right? Anybody, individual, including minor, a child below 18 years also can open a Pfc account, right? Look at the second one. An individual of Sri Lankan origin, including a minor. Individual of Sri Lankan origin, including a minor, who is a resident outside Sri Lanka. Now look at this. Individual of Sri Lankan origin, including a minor, who is a resident outside Sri Lanka. Now, as I think you know, right? When we look at the resident, central bank says to open a Pfc account, you exclude them because we know Sri Lankan people who have migrated to other country, they are individual of Sri Lankan origin, including their children. Now they are resident outside Sri Lanka. So those people can open a Pfc account, right? So you should know it is not only resident can open Pfc account. There are Sri Lankan origin who are resident outside Sri Lanka also permitted to open Pfc account. Because when we learn the resident, we have seen central bank given special permission. The Sri Lankan origin living abroad can open Pfc account, right? So therefore, under Pfca category, that is there. Then a foreign and non-national resident in Sri Lanka, including a minor. They are on a resident visa. They are a resident in Sri Lanka, including their children below 18 years. They can open. A doctor child less than 18 years, all are permitted to open Pfc account. A foreign and non-national, I told you, this is the category under NR, NNFA, and the Formal Exchange Control Act. Under the new act, Foreign Exchange Act, the account is Pfca. The eligibility, a foreigner, non-national, either on temporary visit to Sri Lanka, either visited temporarily, or going to come to Sri Lanka, intend to visit to Sri Lanka. I mean, they are going to come in future. If they show some document evidence they are going to come into Sri Lanka, we can open a Pfc account. Or when they are on a temporary visit to Sri Lanka, even they can open a Pfc account. So you know the categories of people who can open the Pfc account. Anybody reside here, any person origin of Sri Lanka living abroad, including a minor, or foreign people who are on a resident visa, including minor, can open, right? A foreigner who intend to come or on a temporary visit to Sri Lanka can open. So you know all those four categories. An administrator or executor of Pfca. So you know what do you mean by administrator or executor? If a person or maintaining a Pfca account after his demise, of the death of the Pfca account holder, the fund should go to whoever person yes, name that person in the last will. So whenever you have certain assets, when you are aging, when you are at a later part of your life, you may assign those assets to somebody. So if you have a will, that means you have mentioned in the piece of paper with the lawyer, after my death, my asset is this particular asset should go to so and so. In that, if you mention a particular person, that person is comes as an executor. So you mentioned somebody in your last will, after your demise, the property has to go to so and so. Then the executor is permitted to open a Pfc account in order to disperse those assets. So the executor is appointed as per the last will. Say a person demise is after his death, to see he has not written any will. Then what happened? The court order will be given. His dependent or wife has to file a court order after his death. The court will appoint a person called administrator, maybe the wife or whoever, the administrator. That person can maintain an account in order to sort this whatever assets belongs to the particular death of the person. So these are any account you have administrator or executor. So in order to or sometimes you will have a nomination. So you may nominate a person. That nominee also can come as a administrator, right? So those people are also permitted. This only come in the event of a death of the account holder, right? So these are eligibility people, right? Now you know the eligibility people, right? So opening and maintaining a Pfc account can be opened in the form of a savings, current account, since it's a foreign currency account, there is no checks facility in foreign currency account. So there is no overdrawing facility, right? You can have a term deposit. So you can have a savings account, you can have a term deposit, you can have a current account, but there is no overdraft facility. There is no check issued for foreign currency. Only is you are opening a current account, there is no checkbook, there is no overdraft facility. But why do you want to open a current account? Sometimes you will prefer, you don't want to get any interest, because current account bank do not pay interest. So you might open on your preferential, you might open a current account in foreign currency, right? But no checkbook, no overdrafting facility, right? PFC, the personal foreign currency may be held as joint account with other eligible account holder, other eligible person. Husband and wife who are Sri Lankan working, or husband and wife working in Middle East can open a joint account, right? Or husband and wife migrated to Australia, they can have a joint account. Or two brothers can have a joint account, right? Whoever eligible person can open a joint account. And central bank, under this revised Foreign Exchange Act, they have given permission a person who has taken foreign currency notes for travel purposes, right? This is actually, this was the issue. This has happening in past, where people take foreign currency notes for travel purposes, right? They spend certain amount of money, then whatever balances, the residue amounts, they keep it with them. So they come to the bank and ask him bank to open. Those days bank do not give the permission. Now under Foreign Exchange Act, central bank given permission. Okay, if anybody taken a foreign currency note for travel purposes, after spending any balances, if he or she has, those money can be utilized to open a Pfc account. So that is what the new Pfc may be opened for individual with a deposit of foreign currency note brought back to country being unutilized. So they have not utilized the travel allowance. Say a person taken $5,000, gone to Middle East and Dubai, come back, he has only $1,000. If he is supposed to encash it to rupees, but now he has the provision, he can keep the 1,000 and open a Pfc account. Central bank given the permission, right? So the whatever the money that foreign exchange you have taken, even out of rupee account, by debiting a rupee account, you can deposit such balance amount to open a Pfc account. That is a new change to the regulation under the new act. Okay, now we are going to look at it under the permitted credit. I have simplified for you to better understanding into 5 categories: fund transfers, current transaction, foreign currency notes, investment, or deceased, or nomination, or executor, administrator. So these are the 5 categories. So permitted credits into 5 categories, right? So what are those 5 categories? Fund transfers. So let us look at under Pfca, what are the fund transfers? So try to understand each credit. These are each credit. Remittance in foreign exchange received from outside Sri Lanka. So any money coming through the banking channel as a inward remittances to the Pfc account holder is a credit. You can, that is one of the permitted credit. So you can get the money through the banking channel as a inward remittances. So take example, you have opened a Pfc account. Your brother who is in Canada, or your father working in Middle East, okay, your sister working in UK can send some money to you. So those are inward remittances. Those are permitted credit to your Pfc account. You are getting money through the banking channel, right? Inward remittance. You call inward remittance. Transfer from the Pfc account, same account holder or immediate family member. What does it mean? Transfer from the Pfc of the same account holder, meaning if I maintain an account with commercial bank, right? If I maintain an account with commercial bank, my Pfc account, I can transfer from my commercial bank account to my national bank account. From same account I can transfer, or I can transfer from my commercial bank account to my wife account at Bank of Ceylon, immediate family member. So you should understand what do you mean by that. If a PFC account holder can transfer to his own account, maintain with other banks, or he can transfer to immediate family member, meaning I can transfer to my wife account, I can transfer to my children account, I can transfer to my parents account. Wherever the account maintained in other banks, I can transfer from my PFC account. So they get a credit. So in other words, the PFC account holder get the credit from their same account or from the immediate family member. They are getting a credit to their PFC account. So look at the account holder's perspective. So if I am the account holder, my wife sends some money in different country, I get it's credited to my account. So it's inward remittances. Oh, I can transfer from my PFC account from commercial bank to my account at HNB of the same account holder. That is what it means, right? Then the third one, transfer from a business foreign currency account or inward investment account or account maintained in the offshore of the same account holder. What do you mean by that? Say I'll take example as mine, so for you to I can explain to you. So say I have account PFC account at commercial bank, right? Now I have a business foreign currency account at HNB. So you can ask the question, can an individual can maintain both accounts? Yes, he can. At what instant it's possible? Say I can open a PFC, there's nothing to prove I am a resident. I can open a PFCA, there's no problem. For me to open a BFCA, I have to provide services. I have to show the bank I am earning foreign exchange. Say I am a professional doing some consultancies to some foreign company in Malay or Bangladesh. So I am earning. So I have gone and opened my BFC account at National Bank. So I have opened BFCA at National HNB. I am earning foreign exchange because I am providing services to foreigners. As a result, I am getting inward remittance. So I have a BFCA at HNB. I have my personal account at commercial. Right? Now I can transfer from my PFCA to my BFCA at HNB, or from HNB BFCA to my PFCA. Both are possible. So I can transfer. So whatever BFCA account, I am transferring to my PFC account. So from HNB, I am transferring to my PFC account. That is what it means. Transfer from a business foreign currency account or inward investment account. You know what do you mean by inward investment account? Suppose say inward investment account is an account where a Sri Lankan working in other country also can maintain inward, Sri Lankans are here now not permitted. You and me can't open inward investment account, right? But if a Sri Lankan working in Middle East or Sri Lankan living in other country, they can open a inward investment account. So if I give you an example, let's say I was working in a company in Dubai. Okay, during that time I opened an investment account, IIA account, to invest in Sri Lanka. Now I have an IIA account in my name. I am also having a BFC account at HNB. I am also having a PFC account at HNB at commercial. So I have PFCA at commercial. I have a BFCA account at HNB. I have a IIA account also at HNB. So I have two accounts at HNB, IIA, BFCA. I have one account at commercial, PFCA. Right? Right. Now, when I was in Middle East, I open IIA with HNB. So I can ask my banker transfer from IIA account to my PFC account. I can tell HNB to transfer to my PFC at commercial. Right? I can ask HNB to transfer from BFCA to my PFC. Right? Both are possible. Right? Then you can see offshore banking account. What is that offshore banking account? Sometime what happened? There is a person, same person. So if you take example, I given myself as an example. So I give you all three options as mine. IIA, I work in Middle East. BFC, I provide services. Personal foreign currency account, I'm a resident here, right? Let's say when I was in Dubai, right? when I was in Dubai, I opened an offshore account at Standard Chartered Colombo. When I was in working in Middle East, I opened an offshore account at offshore mean anybody foreigner can open. So I was a foreigner in Middle East. I opened an offshore account, right? So when I open an offshore account at Standard Chartered Bank, now I can give instruction from all three sources to come to my Pfc at commercial. I can tell HNB to transfer from BFC account. I can tell HNB to transfer from IIA account. I even can tell Standard Chartered transfer from my offshore account to my Pfc account. So you can see from a Pfc account holder can get money from his various other account in other banks, different types of account. IIA, OIA, IIA account maintained in offshore banking unit or BFC account. All three are permitted. You can see the important word, same account holder. It has to come to the same account holder. Right. Then look at the fourth one, where the account holder is an immigrant, resident outside Sri Lanka, or an immigrant leaving, say a Sri Lankan person now migrated to Australia, or is going to leaving to Australia to migrate. So he has certain migration allowance he can take. When he migrate, he can take certain amount of money. It can be migrant allowance, or it can be his current income. Current income. Say he is drawing pension, he is drawing some rent income, all his current income. He is permitted to take this money outside Sri Lanka. Instead of he's taking outside, he can put the money back to his Pfc account. So that is what is permitted. So the person who has migrated or about to migrate, whatever the migrate allowance, he can send it outside. Instead of sending outside, he can tell the bank, transfer to my Pfc account. So he can get that money to his Pfc as a credit. So you can see where the account holder is an immigrant. That means immigrant means you are going into the other country on a PR outside Sri Lanka, or immigrate, you are leaving Sri Lanka shortly, right? Your eligible migration allowance could be transferred to your Pfc account. You can do that, right? So if you are intent to migrate to other country, whatever the amount, either you can send it to your overseas account, or even you can tell the bank, okay, convert and transfer to my Pfc account, because all your migration allowance are in rupees. You can tell the bank to convert and putting into your Pfc account. That is only you have to, only when you are eligible, and you have to give the documentary evidence when you are migrating. Then only it is possible. You can't tell us simply convert rupee and translate to Pfca is not possible. You should become eligible to remit your money as a migrant allowance. Then only those funds can come into Pfca. Subject to that, remember, it is not simply converting your rupee and putting into Pfca. No, it is not, right? So you should know, when your migration allowance are remittable to outside Sri Lanka, those funds can come back to your Pfca account instead of going out, right? Then transfer from Pfc account maintained or account maintained in OBU irrespective of the account holder, where both parties are person resident outside Sri Lanka. Let's say A and B, both are living in, one is living in UK, one is living in Canada. One is living in UK, one is living in Canada, right? So both are living abroad, but both are having a Pfc account. So they can transfer from their respective Pfca. One person having account, which bank of Ceylon? A UK guy. Canada guy maintaining account is HNB. So both guy can transfer each other because both are foreigners. So they have no restriction. If the Pfca holders are outside Sri Lanka, simply they can transfer funds. There's no restriction, right? So remember that transfer should not, there is an exclusion, should not the sale proceeds of assets. There can't be any assets. So there can't be any movement of assets. Exclusion is there. You can do any transfer, but it is not the sale property, sale of fixed asset, sale of some capital transaction. No. Other than that, any transfer can be possible. You can't sell your house here and tell the person to transfer money to your account in Canada. You can't do that, right? Let's say, take example, if I am in Australia, I migrated to Australia, I have a property in Sri Lanka. I can't tell the Canadian guy to buy the property and send the money to my Pfca account. No, you can't do that. because all the property sale in Sri Lanka has to be done in rupees only. So you can't sell it to others in foreign currency, because if the both PFC account holders are abroad, they can do any fund transfer other than the capital transaction, right? So that is what it meant, excluding the purpose of sale of properties, right? Okay. Then that is fund transfer. Foreign currency notes. Yes, what is foreign currency notes? If you have unutilized foreign currency taken for travel purposes, or if you are taken for your immediate family member, those money can be deposited back to your Pfc account. Unutilized foreign currency obtained for travel purposes or for immediate family member. Say I have taken $5,000. My wife, I have given it to my wife for $3,000. So all our family members went for a trip. Now we have balance, each and everyone has a balance. Everything can put back to your Pfc account. Unutilized. Whatever balances amount we can deposit you. So that can come as a credit to Pfca, back to Pfca. Or you can take a travel card, right? Foreign travel card. You know why the foreign travel card? When was the foreign travel card introduced in Sri Lanka? I think 2006-7 period. Banks introduced foreign travel card because what happened? Travelers checks were issued. Generally, people when they travel, they take other than foreign currency notes, they take foreign currency note. They take the travelers checks. So what happened when they take the travelers checks? Travelers checks was removed from the market. So there were two brands, Thomas Cook's and American Express. These are the traveler check brand that were issued. So what happened? They were globally moved away from the issuance of traveler, because that traveler checks operations were a bit cumbersome. There are a lot of thefts were taken place. So they felt it continuing business is not prudent. They stopped it. So therefore, when people traveling abroad, in Sri Lanka, we don't have any other provision to take foreign exchange other than the currency notes. So the banks introduced, central bank given permission to authorize dealer. Okay, you issue a travel card, which is like a ATM card. You can preload. You can upload a foreign exchange amount into the card in dollars or sterling, and you started using it, right? So like now that card is became very popular, because now the banks debit cards, which are international branded card, are issued debit, Visa or your Visa card or Mastercard. So these are international brand. So even your debit card can be used as a travel card. So there's no necessary for you to now use travel card. That is the reason the travel card was not very popular, despite uh, sorry, I moved to, yes. So whatever the foreign travel card you loaded, if you have anything unutilized, you can put it back to say you are loaded 5,000 into the travel card and you are gone. You spend only 3,000. You have balanced 2,000 in the travel card. So you can ask the bank to put the 2,000 back to your Pfc account. Unutilized amount in the travel card can be put back to the Pfc account. That comes as a credit, right? Then you can bring back as a foreign currency notes. So say you are a person working in the Middle East, he has a Pfc account. He's a Sri Lankan working in abroad. He comes with him. He's carrying $20,000 notes and coming into Sri Lanka. So what he can do, when he comes, there is a requirement in Sri Lanka. You have to declare when you are bringing anything $15,000 or its equivalent. You have to declare at the customs. There is a separate counter at the customs. So you have to go and declare. Then there is a declaration form given. They will sign it. There is a name and amount, from which country you travel, everything there in the declaration form. So once you declare, they will give a small receipt. So with that, you can come to the bank and deposit your Pfc account, right? So if that is exceeding $15,000, suppose say you are bringing less than $15,000, you can't declare the customs, because when you go to the customs, they will say you are carrying less than 15. You say you are carrying only 10,000. So they might say there's no necessary for to declare. But if you insist, they have to declare. But if you say If they say no necessary, then you are coming back without declaration. Now when you are coming back to the bank, now bank is asking, okay, give us a declaration. That means they want you to say this 10,000 was brought with you at the time you arrived here. So you have to give a small declaration to the bank. I traveled from Dubai on a vacation. I was working in Dubai. So when I came here, I was carried with me $10,000. And you will give a small declaration letter to the bank and supported by the arrival chop in your passport. So you arrive, when you arrive in the custom immigration, would I put a arrival chop? So you give that arrival chop passport and your personal data in the passport. With that, bank can accept it if it is less than 15,000, right? So remember, currency notes can be deposited to the Pfc account subject to declaration if its amount exceeds $15,000 or equivalent. If it is less than $15,000, declaration to the authorized dealer. Authorized dealer means banks. So you have to give a declaration if it is less than $15,000. So these are the permitted credit and the currency notes, right? So let us look at current transaction. So what are the current transaction? Anything to deal with goods and services, right? Let's say transfer from a Pfc account maintained in OBU of a person resident outside Sri Lanka. Let's say there is a person resident outside Sri Lanka, is transferring to your Pfc account. You are given some service to him. Let's say I am a professional advisor. There is one of the Sri Lankan person working in Middle East. He want to invest here, so he asking my advice. So I gave my advice, right? So for my advice, he can transfer his personal foreign currency account to my account, right? And I have the option. Remember, when I am giving advice, I have the option to open a Pfca. I have the option to open a Pfca, right? That is provided I have a Pfc account. If I don't have, if I say I given some current transaction by way of a service, I do not have, it's a one-off case. So that funds can come as a credit to the current, as a current transaction from a Pfc account holder or OB. OB you mean a person maintaining an account and offshore banking unit. What do you mean by offshore banking unit? You know, in banking, there are two: domestic banking unit, offshore banking unit. Offshore, every bank in Sri Lanka given permission as a separate license to have an offshore banking unit. So offshore banking unit only catering to foreign currency transaction. There is no LKR operation in OBU. Offshore banking unit do not carry out any LKR operation. All the transactions are designated in foreign currencies. So who can open account in OBU? Any foreigners, any foreign individual, any foreign entity, except one resident entity which is a BOI entity. They are exempted from local regulations. So only resident entities are permitted. Other than that, all the account holders in OBU are foreigners, foreign entities. So any foreigner can open a OBU account. He can transfer from his OBU account to a Pfc account holder for a current transaction, right? Current transaction mean I can be anything I service or related. When I'm buying something, I want to send some money, I can do the transaction as a current transaction related to goods or services. It is possible, right? It's the current transaction. Transfer from a diplomatic foreign currency account of a person resident in respect of supply of goods or services. Yes, diplomatic person. Now, you know what is diplomatic foreign currency account? There is the people who are here representing their country. Let's say I commission the Chinese ambassador here in Sri Lanka. So he can maintain a diplomatic foreign currency account. So remember, when he maintaining a diplomatic foreign currency account here, he's a foreigner. Though he's here, he can be treated as a non-resident because these are diplomatic people representing China. So when you supply goods to those kind of people, that funds can come to you from your diplomatic account, come as a credit to your account, right? Then where the account holder where the account holder is a citizen of Sri Lanka rendering service to outside Sri Lanka and overseas employer transfer from her. Right. For what is this? Now, I think you would have known. I think we have. There is something called a distribution, inward remittance distribution account. I think now they goes as a Pfc account, right? There are Sri Lankan business entity who provide distribution of salaries. Suppose say you are a person working in a overseas company, and your salaries will be paid by a local company who is doing the distribution work of the salary on behalf of the local foreign employer. On behalf of the overseas employer, the salary distributions are done by local company. That local company has a BSc account. That local distribution company can transfer from his BSc account to my Pfc account because I am working for an overseas employer. But the overseas employer outsource the salary component to the local company in Sri Lanka. That company can transfer from their BSc account to my Pfc. Is that my salary? So my salary can come from my overseas employer through the local distributor who maintain a Pfc account. So that is one of the permitted credit, right? There are other two more transactions where in a Sri Lankan vessel, as I told you, where the account holder is citizen from Sri Lanka working abroad in a vessel aircraft owned by the shipping. So airline company transfer from the BFC account maintained or local shipping. Yeah. So if the employer has a OBU account or employer has a BFC account, they can transfer crew member salary, employment income to the account holder. So say you as a person working for the Sri Lankan ship as a crew member. So the Sri Lankan shipping company having a BFC account, or they might have an offshore banking account, they can transfer from their account as a remuneration of your salary because you are working for a crew as a crew member in the Sri Lankan vessel, which has a OBU account or a BFC account. They can transfer from there, right? Then where the account holder is employed in Sri Lanka being a non-national. So you know non-national person. That I take example Indian doctors working in Sri Lanka as a non-national with a resident visa. Right? So what happened if the employer, Lanka Hospital, can maintain a BFC account? Lanka Hospital can maintain a BFC account because they are treating a foreigners. When they are treating a foreigners, they can take the dollars. There are foreigners come and take a treatment in Sri Lanka. Though when they're giving services to foreigners, they are eligible to open a BFC account. So when they're having a BFC account, they can use the BFCA to pay the Indian doctors who are working there, right? So where the account holder employees, where the doctor is working Lanka Hospital, his wages can be paid by the Lanka Hospital from their BFC account. So each debit and credit understand the concept, right? Otherwise, you should have, I'm giving an example, so you should better understanding. So remember, when it comes to non-national working in Sri Lanka, always think of a doctor or think of a chef working for 5-star hotel in Sri Lanka, or think of a doctor working for Lanka Hospital in Sri Lanka. So then you will have understanding. Non-national intend to come in, a foreigner going to come. So these are, you can easily remember for you to identify the transaction, right? So those people can their EPF funds, ETF fund, all that, everything can be put back to your PFC as a credit because you are working for as a non-national working. So you get a EPF, ETF, everything in foreign currency that can go to your PFC account because Lanka Hospital pay you everything in foreign currency, your salary, EPF, overtime, ETF, everything, right? So that comes as a credit to your account from the employer, right? So what are the permitted investment from the PFC account can be made? You can make outward investment. I think when we study, I think central bank given permission Sri Lankan to invest outside Sri Lanka. So if you have a PFC account, from the PFC account, when you made an investment outside, any return, right? Any of your income out of your investment you made outside, that income can come as a credit to your Pfc account, provided you made the investment by debiting your Pfc account. So that is what it meant. If you read it full, you can understand. I will explain again. If a Pfc account holder is made out of his Pfc fund to invest outside Sri Lanka through the OIA, outward investment account, and central bank permitted Sri Lanka to invest outside. So the account to be open as outward investment account, OIA. So you can transfer from your Pfca funds to invest outside. When you are making an investment, there are return coming from your investment. That investment return can come back to as a credit to your Pfca, provided your investment is made out of Pfca account. Understood? Right. That is what it says. So you would have made by debiting Pfca, you would have made the investment. Now the returns are coming back. Then transfer from an OIA of another person. This is very interesting. Transfer from an OIA of another person. Suppose, say, you have made an investment outside. You have bought some shares. Say, I'm the Pfc account holder. I have made some Pfc funds to invest in Google shares. Google is doing well. So I bought the Google shares, or Microsoft or Google. I bought the Google share. Now the Google share prices is gone up. I want to sell it. Right? Now there is other person who want to buy it. Now that person send the money to buy my investment of Google shares. He is the buyer. So he has a OI account. He's also want to invest. Instead of he sending money outside, he's sending to me because I have invested in Google share. I am selling. So the buyer who want to buy my share, he has OI account. He also want to invest outside. From his OI account, he is transferring to my Pfc account to buy my shares, which I have invested by debiting my Pfca, right? So you understand this, right? So what does it mean? Sri Lankan persons are permitted to invest outside Sri Lanka, to buy shares, to buy debentures, to buy sovereign bonds, buy corporate bonds, buy unit trust, all are permitted. So you can invest. You can't buy immovable property. Other than that, you can buy any securities, right? So when you are buying securities, there can be, if the company that you bought shares are going up in prices. So there are other investors who want to buy. So when somebody one of your friend who also want to invest outside Sri Lanka, he knows that you have already invested in Google share. He's asking, are you selling the Google share? Now you want to sell it. Instead of you are selling to any other body, you will selling to a known person. So what you will do, you will sell your Google shares to whom the other person who is also Sri Lankan want to invest. So he will send from his OIA account, he is sending money to your Pfca, being the sale proceeds of your shares. So that is what it meant, right? Then maturity proceeds of, special deposit account in central bank introduced 2 years ago, something called a special deposit account. When we are dried out inward remittances coming into Sri Lanka, they brought something called special deposit account, where after 6 months period, 1% more than the normal interest, or 2% for more than 1 year, more than 6 months, up to 1 year. So these are special deposit account. So when you are invested in special deposit account, once the investment is over, that money can come back as an investment back to your Pfc account, right? So these are permitted investment, right? Then you are also permitted to invest Sri Lankan development bond issued in foreign currency. From your Pfc account, you can make investment in Sri Lanka development bond issued by central bank. So when you are buying development bonds in foreign currency, the return that coming from income, maturity proceed, everything, you can put it back to your Pfc account, provided you debit and bought the by debiting your Pfc and you have to bought the Sri Lanka. Always remember, when any investment coming back, you have to initially debit. Then only the return can come back, including the sale proceed. You have to initially debit. So always remember, if you read it full, if the original investment have been made by debiting, so every investment has to debit Pfca, then only it can come as a credit. So it can't come as a credit without the debit. Now always remember that corresponding debit should be there with the credit. Interest, whatever balances in your Pfc account, you have interest income coming in. So that also can coming as a inflow to your Pfc account, right? Then where the account holder is a non-national in or outside Sri Lanka, including a minor, transfer of fund correspondent to rights. This is, let me explain. This is something like this, where account holder is a non-national, right? The account holder is a foreigner or outside Sri Lanka, including minor, transfer of funds correspondent to permitted debits related to any income, any capital proceeds of permitted investment inherited. Suppose say the account holder is a non-national, is say an Indian doctor maintaining a Pfc account here, right? He is Indian doctor, but what happened? He has certain inherited property in Sri Lanka by virtue of his grandparents who were one time Sri Lankan and given permission as treat that particular Indian person as a in their last will nominated him as after their demise this should go to him, but that particular person is now non-national foreigner, right? So central bank has given permission. Okay, if you are a non-national, right? You have a Pfc account, you maintain a Pfc account by working here. Then in the meantime, you have some inherited assets by gifted or inherited. Now those sale proceeds, right? Those sale proceeds can come into, including a minor. So it's not only, it is not only you, even his grandparents would have given certain things to the account holder, and his children, they would have divided their last will into so many people. So if you are apparently a foreigner and you are entitled for an assets here in Sri Lanka, those assets have been sold, that proceeds can come back to your account as a sale proceeds. Since you are a non-national, you are entitled to get that inherited assets. But the person who is nominating you may be one of your blood relation or grandparents or whoever, right? That is also possible. Or sometimes it could be this way. This is one example. There are so many examples you can quote. Okay, sometimes Sri Lankan origin, a minor who has migrated to Australia is a minor. Now they are grandparents. They wanted to give that money to that particular person. There are so many people, right? There are so many people who are migrating. Their children are small when they are migrating. Now their grandparents has a lot of assets. So they nominated their son as a grandson. They want to gift something to them after their demise. Those funds can go back to the minor's account or their children account who maintain a Pfc, because the non-Sri Lankan migrating to Australia, their grandchildren all are eligible to open Pfc account, right? So these are inherited from their grandparents or their mother's children. That inherited assets can come back as a credit to the Pfc account, right? It can be gifted or inherited. These are assets owned by their parents or grandparents. Okay, deceased. What do you mean by deceased account holder nomination? As I told you, the account holder can, after his death, the funds has to be credited. So there is a probability the Pfca deceased person account holder is nominated somebody. So that nominee can receive. So the nominee or the executor, you know what is nominee, you know, when you are an account holder, you can nominate somebody. After your demise, the fund should go to that particular person. He is a nominee. So after death of the person, the fund should go to the nominee. In order to get the money, nominee can open a Pfc account, and the funds will come as from the death account. The person who has died, the funds is his account can transfer back to the nominee's account. Or executor, if there is a last will, there is a person nominated, or person in the last will, there is a person assigned by the account holder. After death of the account holder, funds can come to the executor account. Or there is no will, no nomination, then the court will appoint a person called administrator. So the funds can come to the administrator account. That is what it says. Deceased means the account holder, after death of the account holder, the funds can come into their dependents, their nominee, their administrator, their executor, right? So then the last one, in respect of an existing account holder being a person resident in Sri Lanka who is nominated as a beneficiary, transfer from IA of the administrator, executor, or receiver liquidator. Okay, so here what happened? Here the deceased person as a IA account, right? So the deceased person's assets have been nominated to a person who has a Pfc account. So then what happened? Those funds lying in the IA account can be transferred back to the Pfca account since the demise, because the person who get that under nomination as a beneficiary can get that whatever the funds that has been inherited by the death of the particular person can come back to the account holder who is supposed to be the beneficiary under the nomination. So that person can maintain a Pfc account holder. So those people are permitted to transfer from whatever the inherited assets of the demise person, the person death of is death, the funds can transfer back to the nominee or the beneficiary of the nomination. That account can be credited. So these are deceased person permitted credits. Okay, now we are moving on to the permitted debits to Pfc account. Now you know the credits, right? There again, I have given fund transfers, current transaction, foreign currency notes, investment, and any other thing miscellaneous. So now you know the permitted credits. So now you know there are a lot of permitted credits under Pfca. All are permitted credit. So if you go through the direction, you should understand each credit, there is a meaning. If you don't know the meaning, that means you are unable to explain to the customer. They might ask, can I do this? Can I do this? If you know all the permitted credit, then you are in a position to answer any query. Because when you are working in the in a department where these foreign currencies are handled, you should be in a position to explain. Or you may working in a compliance of department. You should know whether this particular transaction is a permitted transaction. Or you may be in operation. You should be in a position to know whether whether we can give an approval to carry out this transaction, whether it's first of all permitted. If you do not know the permitted credit and debit, you don't know whether it's a permitted or not, right? That is the reason you should know all the permitted credits and debit. Then you know this is transaction is permitted, right? So let us look at all the permitted debits to this account. So first, fund transfers. Any outward remittances made outside Sri Lanka for any purpose, where the account holder is a person resident outside Sri Lanka. Right. If the person resident outside Sri Lanka, simply he can do any transfer. Any transfer. If a person resident outside Sri Lanka, let's say a Pfc account holder is in Australia now, he can utilize his money to anything, including to acquire asset in Australia, no problem, because the account holder is overseas. He can't do a capital transaction while in Sri Lanka. But if the account holder is outside Sri Lanka, he can utilize for any purposes. So that is what you got to understand. If the account holder is in Australia, he is asking, I want to buy a property, can I transfer money? Absolutely no problem. Because the Pfc account holder is a non-resident. He is a citizen of, though he's one time Sri Lanka, now citizen of Australia. But he has a Pfc funds. You can simply transfer. That is what permitted debit. So you should know whether it is permitted, right? So any outward remittances can be transferable if the account holder outside Sri Lanka. Transfer to the Pfc of the same account holder. Yes, we know the credit. We learn the credit, same debit. So you remember, now since you have learned certain debits, certain permitted credit, corresponding debits are coming now. So we have learned from the same PFC account holder, I can transfer to my same account, my same account in HNB from my commercial, right? When I transfer from commercial to HNB, remember, now you understand very simple definition. Say I have a PFC at commercial, I have a PFC at HNB. When I'm asking my commercial to transfer to my HNB PFC as a credit, my PFC at commercial get debit. So it is the debit now we are talking about. I can transfer, I ask my bank to transfer from my PFC at commercial to HNB. So I am the same person having both account at HNB and commercial. I can transfer. So when comes as a credit to HNB, maybe debit to commercial. It's the same account holder. Same way, immediate family member. I can transfer. I can transfer to my wife's account. So from my account, I can transfer to my wife's account. So it's going to be debit to my account. So I can transfer to my account. I can transfer to my immediate family member. I can transfer to my son's account. I can transfer to my parents' account. Okay, that all are permitted, right? PFC account holder, immediate family member, right? Transfer to the BFCA account maintained of the same account holder. Yes, we learned that, right? I can transfer if I am having a PFC at commercial. If I have a BFC at HNB, I can ask HNB to debit my BFCA, transfer to my PFCA at commercial. So transfer to the BFCA or account in OBU. OBU, you know, offshore banking unit also same account holder. If a person has a OBU, let's say he has a OBU account of offshore bank unit. As I told you, when I was in Middle East, I opened an OBU. For example, I have a BFC, I have PFC. Take all three examples. When I was in Middle East, I opened IIA, inward investment. I have offshore account at Standard Chartered. I'm in Sri Lanka, I have a PFCA. I do services, I have a BFCA. So I have 4 accounts, I am entitled. So within which I can transfer to all these 4 accounts. That's what it means. I can transfer to my own PFC to my own PFCA. I can transfer from my own PFC to my BFCA. I can transfer from my OIA account, my offshore account at Standard Chartered Bank Colombo to transfer to my PFC, or from my PFC I can transfer to my BFCA or OBU. All that is possible. So remember that. So that is what it meant. Then where the account holder is a person resident outside Sri Lanka or non-national resident in Sri Lanka and transfer to IIA of the same account holder. Where the account holder is a person resident outside Sri Lanka, that is I was working in Middle East, or a non-national resident in Sri Lanka, transfer to IIA of the same account holder. So what do you understand by that? You got that debit. Where the account holder is a person resident outside Sri Lanka or non-national resident in Sri Lanka, transfer to IIA of the same account holder. That means account holder is a resident outside Sri Lanka or non-national resident in Sri Lanka. You take of example, Indian doctor. I told you Indian doctor. Indian doctor wanted to make an investment in some shares. He is eligible to make an investment. So he has some PFCA funds. So he can ask the bank, debit my PFCA and transfer to my IIA account. So he's giving instruction to debit his PFCA, transfer to his IIA account to make an investment. So where the account holder is a person resident outside. So the IIA account holder can be Sri Lankan working in there or a non-national. Both are possible. Say, I will give you an example in both instances, right? So you should give 2 examples for both categories. There are different category comes here. You need to give an example, appropriate example. Non-national here mean an Indian doctor. Take example, Indian doctor want to invest in some shares in Sri Lanka. So he can transfer from Pfca to his II account of the same account. There is a Sri Lankan in Australia. He also wanted to invest to IIA. So he also can tell the bank, I want to invest to IIA, transfer from my Pfca. So there are two people giving you instruction to transfer to IIA account. One is a non-national, one is a person outside Sri Lanka. That is what it meant. Where the account holder, person resident outside Sri Lanka, that means Sri Lankan in Australia. Or non-national resident in Sri Lanka, that means Indian doctor. Both want to invest in IIA. So simple as that, right? Now you understand? Okay. Transfer to the other Pfca or account maintained in OBE, other Pfca, that means not same account, other Pfca, the other person account, or OBA, irrespective of the account holder, where both parties are person. Yes. Now both A and B, both are foreigners. Both are maintaining account Pfca. Now they are in different countries. They are original, one time Sri Lanka. They can do fund transfers, as we learned this earlier. They can do fund transfers, right? They can do fund transfers. Other than that, acquire of capital nature. So simply they can do any transfer between those two accounts, debit and credit, without capital nature, right? I think I don't know whether you are getting this. Okay, the last one. I think outward remittances funds for any purposes the account holder, where I think there is a provision. I told you in Foreign Exchange Act there is an amnesty given, right? That means under Foreign Exchange Act they are given a amnesty where, as I told you, where Sri Lankan people who have some foreign reserves or foreign currency earning kept outside Sri Lanka. They kept it outside Sri Lanka. So what happened when they keep the money outside Sri Lanka, they are unable to bring back. So with the Foreign Exchange Act, they brought the amnesty and they told any person who is holding foreign currency outside Sri Lanka, they can bring back to Sri Lanka, even though it was not declared as a taxable income to the Commissioner of Inland Revenue or the head of formerly Exchange Controller or Department of Foreign Exchange. Those money can come back as a credit. That is under permitted credit. There is no problem. When that money is coming back to Pfca, central bank also permitted those money can be sent outside. So what is the last one here? I think in this slide you are unable to read the last two sentences. I think I'm trying to I try to get you what is, so read it to you, because hold on a second, because the last few lines I'm unable to. Okay, I think the last point, outward remittance of funds for any purposes of the account holder, where such funds have been remitted to Sri Lanka in terms of Section 8.3. That is what I just want you to take some note on that, right? That is the amnesty. That is the amnesty given. That is the amnesty given by. So you can read it here. I think in this slide you can see it here. There is a section. All right. So I now managed to see that last. It was not I couldn't get that last few lines to you, right? You can see now Section 8 of 3 of Foreign Exchange Act. There is an amnesty provision. What do you understand by that? If you look at the Foreign Exchange Act under Section 8, subsection 3, there is a provision given. The act allows you, if a person want to bring back the money which retain outside Sri Lanka, they can bring back by paying a remittance fee of 1% if the amount is more than $1 million. So that is the amnesty we are talking about. So now, so you can make a small note on that. The note is, so make a note and say, the Foreign Exchange Act provides an amnesty. Foreign Exchange Act provides an amnesty. The Foreign Exchange Act, you can say Foreign Exchange Act as a provision, Foreign Exchange Act as a provision with an amnesty, with an amnesty, where a person possess foreign exchange, possess foreign exchange, not declared to, possess foreign exchange, not declared to the Commissioner of Inland Revenue, not declared to the Commissioner of Inland Revenue, not declared to the Commissioner of Inland Revenue by way of a taxable income, by way of a taxable income. In simple terms, people who want to hide money, I mean, those people don't want to bring the money here. They kept it outside Sri Lanka. So what happened when they draft the Foreign Exchange Act? They want to bring that, ask those people to bring the money. They won't penalize them. They won't punish them. That's all. That is what amnesty, right? So yeah. So what happened? The Foreign Exchange Act provide a provision with an amnesty where the funds that have been kept of funds of foreign exchange not declared to the Commissioner of Inland Revenue by way of taxable income could be remit back to Sri Lanka, could be remit back to Sri Lanka by paying a remittance fee of 1%. By paying a remittance fee of 1%. By paying a remittance fee of 1% of the remittance. As a one-off payment, right? So remember, if the amount is less than $1 million, there is no 1% is required. If the amount is less than $1 million, the 1% is not required. So the 1% is only required if the amount is more than $1 million. So make a note. If the amount is less than $1 million, the remittance fee is not applicable. If the amount more than $1 million, the remittance fee of 1% is applicable. Right? So this is the amnesty clause. Right? So with that, those people can bring the money back to Sri Lanka. That is what the amnesty talks about, right? Okay. And also in the amnesty, you can, if you want, just make other note. If you are investing in Sri Lanka development bonds, even though it's more than 1 million, say you are bringing $1.5 million, which you kept outside Sri Lanka. You have been given permission. Okay, you will not be penalized. You can bring the money and invest into Sri Lanka development bond. Even you don't pay 1%. So if you are bringing anything 1 million above, you have to pay 1% remittance fee. But if you want to invest into Sri Lanka development bond, even though the amount is more than $1 million, the remittance fee will be excluded. So you have three options now. If you are bringing less than $1 million, no remittance fee. More than $1 million, 1% remittance fee. Right? If the amount more than $1 million and invested in Sri Lanka development bond, if the amount more than $1 million invested in Sri Lanka development bond, SLDB, Sri Lanka development bond, the 1% remittance fee is excluded. Or exempted. So you have three. In amnesty, you should know three factors. You need to pay 1% if the amount is $1 million US dollar above. You need not to pay less than $1 million remittance fee of 1%. You need not to pay. Some in one option, you can bring more than $1 million and invest into Sri Lanka development bond. Then you need not to pay. So the you need not to pay 1% less than 1 million, or investing more than 1 million Sri Lankan development bond, 1% is not required. Only 1% coming into force if you are bringing more than $1 million and without investing into Sri Lanka development bond, you have to pay 1%. Is that clear? Right. Now permitted debits to Pfca. Right. So any outward remitter made outside Sri Lanka in respect of current transaction of the account holder, immediate family member, any, so you can make any remittance for your student fee, education fee, medical, anything you can, import, all the payment can be made. Remember, your Pfc account, you can make all the payment. Current transaction mean you can pay for your utilities, you can pay for your, when I say utilities, say you are, what do you mean by utility here? Maybe you have a membership, overseas membership, annual subscription. You may subscribe for some overseas book. All these utilities, you can, routine payment can be made. These are current transactions. You can send your children for education. You can go for a medical treatment. You can go for a foreign trip. You can import for something, not for business purposes, right? All that is, you can use that money. All that are current transactions. So you can make any payment. Right? So remember, people might say from your Pfc you can't. No, you can do a lot of things. You can remit, all these payments are permitted. But currently, I think there is one restriction they brought in. I think I will highlight you. That is temporarily, right? That is for temporarily, because we have this foreign reserve issue, right? Other than that, Pfc will allow you to remit money for your current transaction. In respect of current transfer to Pfca of the account OBO person resident outside Sri Lanka. Yeah, you can transaction with any person outside Sri Lanka with the current transaction. You can pay anybody by debiting your Pfca and make a remittance to other person outside Sri Lanka. But if you want to make any payment, any current transaction, you got some services you need to pay from a foreigner, you can pay. Transfer funds for repayment, service, loan and advances. If you taken a loan from a bank, housing loan or whatever loan, you can debit your Pfca and repay your loan amount. So when you are taking a loan, you need to repay the loan, right? So where the account holder is a non-national or dual employed in Sri Lanka being transferred to the Pfc account, or what does it mean? So say Indian doctor have been paid by Lanka Hospital. Now the Indian doctor, Lanka Hospital says by oversight they paid him more than what he's supposed to get. By an oversight they are paid him $1,000 more. So that the doctor may come to the bank and say, I want to remit the 1,000 back to the Lanka Hospital account or their whatever account. So it is an overpayment of the salary. So that is permitted. So the Indian doctor might come to HNB at Lanka Hospital and say, I want to transfer back to my Pfc account, back to Lanka Hospital because they paid my salary or they paid an allowance which is not belongs to me by overpayment. So that debit is possible. The bank can debit the Pfc and pay back to the BFC or the offshore account of the Lanka Hospital or the Lanka Hospital rupee account also they can transfer from the Pfca. So that is overpayment, right? Current transaction, where the account holder is a citizen of Sri Lanka working abroad. Yes, you know what is, right? Where the account holder is a citizen of shipping working abroad in vessel aircraft owned by shipping airline. There again overpayment. I think you got your salary by oversight they paid you more. So still same thing. I think what you get permitted credit, you get a salary coming in for crew member. You get a Sri Lankan doctor getting his salary from Lanka Hospital. Now the opposite. They got pay more. They have to refund. So it's other way. When they got more, they have to refund. So it's a refund process or overpayment, right? There are instances where a Sri Lankan person get a housing loan, working in Dubai can get a housing loan, right? That housing loan need to be taken mortgage reducing policy, MRP, mortgage reducing is an insurance policy. So sometimes you want to take the bank to take bank might ask you to take an insurance policy. So the bank can debit your Pfca and make a payment for the insurance for the housing loan that you have taken. So insurance premium can be payable for the housing loan that you have taken. That is insurance premium for mortgage reducing policy. When you are taking foreign currency housing loan, so you can ask the bank to debit your Pfc account for the insurance premium for your housing loan. MRP, mortgage reducing policy housing loan, right? Those are current transactions. Yes, you can take for your travel expenses $5,000 currency notes up to 5,000, or for your travel card you can debit ask the bank to debit and load your foreign travel card. So that is for the uploading your foreign travel card, or if you want to take currency note, now the limit is 5,000. 10,000 have been reduced to 5,000, right? For travel purposes, only for travel purposes, right? Remember, travel purposes. If you want, just underline travel purposes, very important. So I think we learned something for Pfc account, a person, a non-national, non-resident intend to come to visit, temporary visit. So those people, when they come here, from their Pfc account, they can ask any amount of currency note they can take. Actually, they can withdraw the money in currency notes. This is fully exempted. This is only for this category of not everybody. So you are only supposed to take foreign currency notes from your foreign currency account, travel purposes. But exemptionally, the foreigners intend to come or temporary visit to Sri Lanka, they can withdraw funds for any purposes, not only for travel purposes, because they are here to keep the money preserved in the foreign currency account. Therefore, they can take it back. For them, it's not only for travel purposes, they can withdraw the foreign currency from the account, right? That is the exemption. Only exempted clause. Investment, yes. Payment for making Sri Lankan development bond, yes, you can make an investment. Yeah, as I told you, you can buy outward investment. If you want to make a payment, now you are buying Google share. The person already bought it. So you are buying. So you are telling the bank transfer to another person, the guy you sell the Google shares now. Opposite we learn under permitted credit. You are selling the Google share. Now you are buying the Google share. Then you tell the bank debit my Pfc and pay to the OI account holder who is selling the Google share. So remember both occasion. So you got to understand OIA accounts are maintained by people Sri Lankan who want to invest outside Sri Lanka. So if you invest outside Sri Lanka by debiting Pfca, you can invest outside Sri Lanka. So if you invested something out of your Pfc account, when you are selling that, the money also can come back to your account. Same way, when you want to invest, you can invest out of Pfc account to acquire the shares. So you can buy the shares of somebody who's already bought the shares of the Google. So you are paying him by debiting your Pfc account. So that is what it meant. Then any outward remittance of the account holder for capital transaction, right? But central bank brought a restriction about 1.5 years ago, up to 20,000. That's what I put it in a different color. As per the current regulation, even though I am the Pfc account holder, I can't, as a resident, I can make capital investment. I can make investment up to $20,000 until further notice. Actually, there is no limit. I can do any transaction for my personal investment. Now, central bank says they restricted to $20,000 for the account holders capital transaction. Account holder, not to anybody. Account holder. Up to 20,000 you can make for investment, right? So if you are taking a housing loan, you got to repay the housing loan. So this is the repayment of foreign currency loan. So we will study what type of loan the Pfc account holder can take. So there are two different loans they can take: foreign currency loan and LKR loan. For when they want to repay the loan, they have to debit their Pfc account and repay the loan, right? Disbursement in Sri Lanka rupee. Yeah. So you can convert to your Pfc account to spend locally. Yes. Okay. Now need for a break. Okay. So when we come back, so what is the time now? I think now 36. So we will have a break of, let's assume 40. So you have 40. Okay, 20 minutes break. Okay, so we will meet sharp 3:40. So we will meet maybe 2 to or 5 to 4 o'clock. 5 minutes to 4 o'clock. You have 15 minutes, or not sharp 4. Latest will be 4, right? So I will give you about 15 to 20 minutes interval. So sharp 4 be there. So we will discuss the balance topics. Whatever possible we discuss. Anything residue will continue to the next session. So we will meet you at 4 o'clock. I'll meet you at 4 o'clock. Okay. Can you see the screen now? Can you see the screen now?
Yes,
All
can
right,
see.
fine. Okay. I think we move on to foreign currency loan to Pfc holders. Right. So this is a special arrangement where central bank has given permission, authorized dealers to grant foreign currency loan, especially Sri Lankan employed abroad, other than immigrant. So immigrant, there is a other loan. This is only for Sri Lankan employed abroad. So the inception, I'll tell you, the most of the queries that comes when you are working in a bank, people who are working here for a foreign company also approaches bank for a housing loan in foreign currency or to get a Pfca loan. They also say I'm also getting a income to my Pfca in by way of a dollar. But remember, the requirement is Sri Lankan employed abroad. So you need to employed abroad, not working here. So the working here will not be eligible criteria for you to apply a Pfca loan. So you need to employed abroad. So that is important, right? So purpose, any purpose to utilize in Sri Lanka, any purpose. You can utilize for any purpose in Sri Lanka. You can buy a house or whatever, any purpose in Sri Lanka, yes. To make a payment in respect of current transaction of the immediate family member or the borrower of a, yes. When I say current transaction immediate family member, you know now, right? Immediate family member word mean the account holder can take a loan and send a remittance to his son for the education purpose, right? And for the parents in other countries to look out, whatever is possible, it has to be current transaction, permitted transaction. So sending just the money to parents, it's not a current transaction, but sending remittances to children education, yes, it's a current transaction. So you know, current transactions are related to goods and services. It has to be supported by the documentary evidence when you're approaching bank to effect a current transaction. So that is the fundamental, right? So if the loan proceeds can be utilized for any purposes, and within Sri Lanka, outside Sri Lanka, only for current transactions. So example, as I told you, if you want to buy something, import something, all are current, yes. An immediate family member mean your children's education, spouse education, yeah, you can, right? So medical treatment for your parents, yes, you can take a loan, right? So those are current transactions. Loans and advances shall be granted after assessing the credit risk. Yes, any loans, the bank usual procedure, credit procedure will follow. The bank will always look at it, the cash flow generation, especially in this case, foreign currency. You need to pay the loan in foreign currency. The loan is granted in foreign currency, so expectation is to repay the loan also in foreign currency. So you should prove that you are having a capabilities to repay the loan in foreign currency. So your generation of cash flow in foreign currency is a must. So what happens under the recent revised regulation? They brought a account called a separate account, Pfca loan account. Uh, Bank has to create in the name of the borrower and credit that proceeds to the Pfca account, so that the loan proceeds can be well monitored for what purpose. So what happens is when you're granting a loan, sometime uh, when you credit it to Pfc account or disbursement generally done in local rupees. So remember, I think there's a key here. Though the loan is designated in foreign currency, the disbursement always in LKR. So you got to understand that. So what does it mean? Now, say a person working in Middle East want to take a loan of let's say 50,000 US dollar. The 50,000 US dollar loan will be designated in 50,000. When they give you the loan in the Pfca loan account, it will be converted in rupee and credited to your account. They don't pay you in dollar. Only one exception is there where they can directly uh, pay you in dollar. That is, the exception is, say, if you are borrowing under Pfca loan to acquire a immovable property, a condominium or an apartment. where the property developer as a foreign currency account. So since you are working in the Middle East, you want to buy that property in foreign currency, so you are getting a better deal. So let's say the property is $100,000. So you ask him bank to give 50,000, you put 50,000. Okay. So in that case, you have remitted 50,000 directly to the apartment to reserve. The balance 50,000 you asking bank to approach for a loan. So here, exceptionally, a separate loan account will be created, but the disbursement will be done in foreign currency, directly transferred to the Pfca of the property developer. It is an exceptional case where the borrower is in overseas. One exemption, borrower is in overseas. That is one of the requirement. And the funds are used to acquire a property, immovable property. So if you look at the seller's routine business is to make houses and sell. So he is entitled to open a Pfc account. So the property developer who is in Sri Lanka, who is making this apartment, has a Pfc account, business foreign currency account. So he is selling property. So under the direction of Pfca, he is entitled to open a Pfc account. Now so the borrower also buying from him. The borrower is also in overseas. Therefore, on an exceptional basis, the Pfca loan proceeds can be directly transferred to the Pfca of the property developer to acquire a property. That is only exception. Other than that, all the loan proceeds will be credited to Pfca in LKR, and you got to repay the loan in foreign currency. The advantage here, you will be charged interest rate in foreign currency interest rate, not like 12 or 13%, maybe 5 or 6%. That's the advantage you have, and it's not subject to exchange rate. It's in foreign currency, so you have that advantage. Otherwise, the inflation added, then the exchange rate, rupee depreciating against foreign currency also impacted you. So that those impacts are taken off by taking foreign currency loan. So the the other thing is, under Pfca loan, you must remember, you need to settle the loan in foreign currency since the loan is designated in foreign currency. If you are unable to repay the loan in foreign currency, as a last resort, you can approach the bank and say that you have lost your job and you don't have any other source of incomes to repay the loan in foreign currency. Then bank take the supporting document and probably declaration from you that you lost the job, or supporting document if there is any, to prove that you lost the job. Then converting into rupee loan and recovering is possible. That is exceptional situation. Generally, the borrower is expected to service the loan in foreign currency. Okay, so those are the key points when it comes to foreign currency loans to Pfca holders, especially people who are employed abroad. Okay. Now there is other loan category, foreign currency loan for Pfca holders. Here, Sri Lankan resident or Sri Lanka on permanent resident in another country, an individual who have obtained dual citizenship in Sri Lanka irrespective of their residential status. So can you identify who are this category? These are immigrant. Earlier category, I said other than the immigrant. So this is only catered to these people. But here, this is the immigrant. So the people who are migrated to other country, so they are on PR, permanent resident visa, or individual who have obtained dual citizen in Sri Lanka irrespective of resident. What does it mean? What do you mean by dual citizen? So those people are Sri Lankan, gone and taken PR in other country, and thereafter they obtain the citizenship also. So once the person Sri Lankan origin migrate to other country on PR and subsequently taking citizenship, mean they renounce the right as to be Sri Lankan. They are no more Sri Lankan, because the moment they obtain Australian or Canadian or whatever the country they belongs to, when they take the passport of that country, it ceases. They are no more Sri Lankan. because they renounced their rights as a Sri Lankan because they have gone and migrated to other country, apply for PR, still they are Sri Lankan because when they are on a PR, they are holding a Sri Lankan passport. The moment they change the citizenship, then they renounce the right that they are no more Sri Lankan. Because some people get more benefit by acquiring a citizenship in other country. That is the reason. Because you will be having some social facilities, and after certain age, you have a lot of benefits. Therefore, some people prefer to become a citizen of that country. So those people, when they become a citizen of that country, they are no more Sri Lankan. But subsequently, if they want to come back to Sri Lanka, they have to come as just a foreigner. Because they are now holding, say, the example, Sri Lankan gone to Australia, he is now on PR. After that, he has taken Australian passport, he is a citizen of Australia now. But when he wants to come back to Sri Lanka, he has to apply for a dual. Provided his intention is to come and stay sometime here. If you want to visit, come back, he is just like a traveler, he can come and go. 1 month visa or whatever he will be given, he can come back. But his intention to come and stay with his parents, stay with his grandparents for some time, then he has to apply for a dual. Means that he has to apply a citizenship again. So once he taken the citizenship, he will be considered as a dual citizen. He is one time Sri Lankan, then ceases to be Sri Lankan after obtaining the citizenship. Thereafter, he is trying to acquire the citizenship again. Then he's become a dual. If he once he get the citizenship, he has a dual citizen. That means he can stay in both countries. He can stay in Sri Lanka indefinitely, or he can go back and stay in migrated country. So that is called dual citizen. So, but if you can look at here, it is permanent resident visa, another country, or individual who obtain dual citizenship in Sri Lanka, irrespective of their residential status. Meaning whether they are here or they are there. They are having a. So that means this particular loan is designed to somebody who still to be claimed as a resident or citizen of Sri Lanka. It is not for the person who got the citizenship change, he can't apply. He doesn't have a dual citizenship. He's a foreigner now. So people who are having a PR, having a dual, irrespective of the residential status, they allow to borrow from the local bank. So this particular loan is only confined to, you can see the purpose is to acquire a residential property in Sri Lanka, not for any other purposes. Acquire a residential property, to construct, develop, renovate residential property. So you can see it is evolved only with the property, residential property, not for commercial, residential property. Whether you can acquire, you can construct, you can develop, renovate. All possible, but it's a residential property. So only for that purpose the loan is granted. There again, there are two type of loan they will grant you. You can take the loan in either in LKR or in foreign currency. So the banks have been told to open two accounts depending on the request of the customer. Foreign currency loan account, FCLA, or LKR loan account, LLA. So bank will open that account and credit the proceeds to that account. And then from there, the transfer will be done, right? So here again, foreign currency loan account, say a foreigner, a Sri Lankan, who has migrated to Canada, Australia, now want to buy apartments, one of the luxury apartment he wants to buy, is asking the bank to support the financial assistance. So bank is also willing to give a loan now, right? There again is the same example what I quoted you earlier. If they are buying from a property developer who has a Pfc account, then from the foreign currency loan account, the funds could be transferred to the Pfc of the property developer. That is the only exception. If they are buying a property from a local people, though the currency, foreign currency, the housing loan in foreign currency, but the disbursement still done in LKR. So you should know, in both these accounts, disbursements are generally done in LKR. Though the account is designated as foreign currency loan, the disbursement will be done in LKR. So remember, always remember, though the loan designated in foreign currency, the disbursement generally done in LKR. Otherwise, unless otherwise, on an exceptional situation where the property seller will have a BFC account, he sell the property so that the money, the borrower can pay him in dollars. So same theory applies, same example apply here. So if the person wants to buy an apartment from a property developer, he can ask the bank from the foreign currency loan account to transfer the entire loan amounts to the BFC of the property developer. If they are buying an apartment from a local guy who doesn't have the BFC account, then the transfer will be done in LKR. Though the loan is designated in foreign currency, still the transfer done in LKR. Or the loan is designated in LKR, anyway disbursement has to be done in LKR. There's no question, right? So the loan can be granted in both ways, foreign currency loan or LKR loan. Now here again, the expectation is to the borrower to repay the loan in foreign currency. So he or she has to pay the foreign currency loan. In the event if they are unable to pay, then as a last resort, if the loan is going up to certain category of non-performing category, central bank given permission authorized dealer to convert rupee and recover. So therefore, you need to understand when you are giving a loan in foreign currency as a banker, we always look at the repayment capacity of the borrower, especially whether he has a generation of foreign currency cash flow for a considerable period of time. So if you are extending housing loan, maybe you may go up to 5 to 10 years. Whether he has an employment or business or whatever, consistently for 10 years is something that you need to assess carefully. Because otherwise central bank find fault with the authorized dealer. Simply they are giving a loan and recovering in LKR. So that is not the case. They have to recover the loan in foreign currency. Okay, so that is you need to be careful as a banker. So this segment is only for people who have migrated on PR or dual citizen, only for residential property. So now you know under Pfc category there are two types of loan. For the employed category, other one PR category, right? Okay. Now we are moving on to the others, business foreign currency account, which is very important account. Now you know what is PFC, what are the loans can be given, what are the permitted credit debits, everything clear. Now we are moving on to BFC, business foreign currency account. Here, the bold first in bold in yellow, light yellow color. The following person in or resident in Sri Lanka who earn foreign exchange. Remember the criteria to open business foreign currency account, whoever to earn foreign exchange. You need to show the banker that you are earning foreign exchange, right? So who are the people? An individual resident in Sri Lanka. So remember, just because of business foreign currency, don't think only business can open. No, individual can open. But remember, PFC cannot open by any businesses. It is a personal foreign currency account. It has to be only individuals. But business foreign currency account can be opened by individual or businesses. That's a difference. Personal foreign currency cannot open by any business. It is only for personal individuals. No businesses can open. But business foreign currency account can be opened by individual as well as other businesses who earn foreign exchange. The criteria, whoever it is, to show the bank that their capability of earning foreign exchange. Sole proprietor or partnership registered in Sri Lanka, where proprietor or majority of the partners are resident in Sri Lanka, who earn foreign exchange. Company incorporated in Sri Lanka, company incorporated outside Sri Lanka, which is registered IS. There are, if you take IOC, it's IOC, Indian Oil Company is a registered company in India, but they have a registered office, registered here, their name as an overseas company, Lanka IOC. This goes as an overseas company under the Company Act of our country. So here you can see basically business foreign currency account meant for any businesses within Sri Lanka. Registered office here should have the earning capacity, or individuals, businesses within Sri Lanka, right? Then state institution, recommendation, any government organization who has the capability of earning foreign exchange, yes, they can. Customs, ports authority, they can. Even airlines, airport. A person authorized to carry on business, shipping agent, yes. General sales, shipping and general sales, they are also permitted. Because you would have seen that amalgamation of Pfca was type of three different people: foreign exchange earners, inward remittance distribution account. Then you also saw foreign currency account for agent of foreign shipping and airline. So these amalgamation only the business foreign currency account. So you can see people who are in the shipping and airlines, GSA, general sales agents, also permitted to open a business foreign because they are earning foreign exchange. A receiver or liquidator in the name of the company maintain the business foreign currency account until proceed. Yeah, receiver or liquidator in the event of company winding up, the receiver take it over or the liquidator take it over. So those people are permitted to run the business account if the business is about to close down or winding up due to the insolvency. That people, those category will come in to be eligible to maintain the account. So these are the eligibility people. So a key point, whoever it is, they have to show earning capacity. So anybody who shows they can earn foreign exchange, they're eligible to open. All are there. Individual, sole proprietor, partnership, company, government, institution, all are there. Okay. So central bank is given an annexure uh, categorizing permitted person under these. There are so many people. Though we say individual, it doesn't mean you need to categorize them. So central bank categorize about, I think, 16 category. Last to join is indirect exporter in this annexure. Exporter of goods, obviously. Exporter of services, yeah. Goods, services. That is the core of the current transaction. Goods and services. Persons who engage in businesses of entrepreneur and intermediary. You know what is entrepreneur, right? Entrepreneur, you are coming as an intermediary between two countries. So people who do that business are also permitted to open BSCA. Travel agent and tour operator. So they are into foreign. They are catered to hotel, restaurant. Hotels and restaurant, yes, they are permitted because they cater to foreigners, travelers. Gem and jewelry dealers, yes, they export gem and jewelry. Foreign employment agents, yes, they get their fee from the foreign principal. Therefore, they are also permitted to maintain. Freight forwarders, logistics service provider, a licensed authorized director general merchant shipping, yes, shipping agent and airlines, freight forwarders, general sales agent, GSA, all are permitted. Bank operator licensed by the banker, the oil that supplied to the ship. Operator, port terminal. In the ports authority, you have government look out the terminal operators. Airline terminal service provider in airlines, airport. Food and beverage supply in shipping line and airline. Food and separate beverage suppliers, they are also permitted. Duty free shops, yeah, they are also permitted. They have amended and included this indirect exporter of goods who comply with the requirement. And yeah, indirect exporter, that means the person who supplies intermediary goods or some certain raw material to the direct exporter considered as an indirect exporter. Those people also permitted to maintain BFC account. Suppose, say example, a person import raw material of fabric from Thailand or China, can supply to a direct garment exporter. Therefore, the garment exporter is obliged to pay him in dollar for the local supplies. Because why? Because that raw material is used for exports. So the entire raw material is when you are acquiring certain commodity which is used for export and earn foreign exchange, the ultimate supplier of the commodity are eligible to get foreign exchange. Therefore, the person who import fabric as a raw material to the garment exporter, the garment exporter can acquire by the local uh, supplier the fabric and pay for the fabric in foreign currency because he's having a BFC account. Then the indirect exporter who import fabric and selling to the exporter also permitted to open a BFC account. because without him, the direct exporter can't do the manufacturing process. He's require raw materials, but he is an importer, but he's importing and not selling to the local market. He's selling to the direct exporter who does the value addition 100%. Then it comes form of the export proceeds. Therefore, indirect exporter also permitted. So you know the permitted category under Pfca, right? Opening and maintaining Pfca, yes, same way, savings, current, term deposit, all three type of accounts can be opened. Documentary evidence, including the authorization, yeah. So if I give you an example, any direct exporter service provider may go and register their name with the Export Development Board, EDB. Then they can give the document bank. Then they are treated as exporter, maybe goods or service provider. Or if you are a gem and jewelry person, you can go to National Gem and Jewelry Authority, get a certificate. Then it's sufficient for you to open a foreign currency account. If you are a shipping company, you give the declaration of merchant shipping document. Then you sufficient for you to open. So these are supportive documents. But remember, when it comes to individual, say tour operator, he must be registered with the tourist board. So that document is sufficient for him to open. So likewise, there are certain individual may not be in a position to give the documentary evidence. So situation like that, you have to take a declaration from that particular account holder. If I give you an example, let's say a person who sells something to the foreigners. If I give you an example, take example of king coconut, the person who sells the king coconut, right? Uh, let's say there are king coconut sellers who are close by to the 5-star hotel. So when the foreigners are occupying the 5-star hotel, when they come out, they may consume this king coconut. Then in the event, if they pay in dollars, and this particular person who sells the tamil is entitled to sell the commodity and take it dollar because he's selling to the foreigners. He's selling to a non-resident. It's permitted. So he is eligible to open the Pfc account, right? So he's selling Tamili's commodity because as far as you have to earn foreign exchange by selling goods or services. So he's eligible. So you might ask the question, on what criteria bank will open the account for such person? So such person has to give a declaration to the bank. He is so and so with a nice number, residing whatever address, selling king coconut as a commodity, and to foreigners earn foreign exchange. That declaration is sufficient for a bank to open a VSC. So those are the documents we are talking about. You should have some sort of a document to ensure that the person whom you open a BFCA has the capabilities to earn foreign exchange. That has to be proved by documentary evidence. In the event, central bank checks you to find out whether you have taken the relevant documentary evidence. The BFC account shall not be overdrawn except you are taking an overdraft facility for your account, right? If you are taking overdraft facility, that's fine. Other than that, your account cannot be overdrawn. Say a Tambili person put $500, he can't come and ask the bank to take $600 because it's $500 only he has. So he can take up to $500, nothing more than that. But if you are a garment exporter, you can ask the bank, I want a facility, current account facility with the overdraft for the current account, the BFC account. They require overdraft facility in foreign currency because they want to draw checks. But it's in LKR, they can't draw a check in foreign currency. Though the account is current account, there's no overdraft facility, right? They have to pay the local payment. They can pay foreign currency payment, but it's not a check, it's a bank draft then, right? So you got to understand the overdraft facility is just to facilitate like a current account. They will mortgage some property or whatever. They will have a limit, but the entire overdraft facility has to be repaid by their inward remittances. That is a different. So the overdraft facility should be refilled by collection of export proceeds or inward remittances, right? Okay. So permitted credit to BFCA. So the BFC again, I have divided for you to understand better. without putting all the permitted credit into one list. We categorize them as a current transaction, fund transfers, shipping and general sales agent, because there is other segment in between they are coming in. Foreign currency notes, which situation the foreign currency notes get involved. Investment, yes. Property developer, miscellaneous. Okay. So let's see what type of current transaction. Remittance received in foreign exchange from abroad through the banking system respect of export. Yes, whatever goods you supply, whatever service that you offer, render, right? Whatever entrepreneur trade you do, right? Uh, whatever goods that you locally supply on behalf of a foreign person, right? All that proceeds are coming by way of inward remittance. So that is your first credit to your account. So if you offer service, you are getting. If you are export, your export proceeds come as. If you are entrepreneur trade, yes. Or if you are selling goods to locally and paid by the OBU offshore banking client, then the inward remittance is coming in. So all that is possible. You are selling something, and in return you are getting foreign exchange inflow for your supply of goods or services. So that is your first credit by offering selling goods or services. Then transfer from the account maintained in the OBU of a person resident outside Sri Lanka. So transfer from account maintained in the OBU of a person resident outside Sri Lanka in respect of current transaction. So you can do any current transaction with a person who maintain a OBU account. So you know what is OBU. In local bank, there is a different banking sector altogether. In bank in Sri Lanka, you have two banking books. DBU, domestic banking unit, OBU, overseas banking unit, or offshore banking unit. So the offshore banking unit cater to foreigners, foreign individuals, all the operations done in foreign currency other than LKR. DBU, a mix of both, it is catered to the local businesses. It can be local, LKR, foreign. All the foreign currency account, what we are discussing, what we are talking about, all are in a DBU, domestic banking unit. But there is something called offshore banking unit also in all the banks. So if a foreigner want to maintain an account here, the first account any foreigner can open is under offshore banking unit. A foreigner cannot open an account with DBU unless it's a permitted. But OBU, any businesses, any foreign individual can open, right? So likewise, anybody open under OBU, if a local guy supply to him, then the money can come in from the OBU account of the particular guy. So the transfer from the account maintaining the OBU of a person resident outside Sri Lanka in respect of current transaction. Say, I am giving some professional service to guy who is in Dubai. So he may pay me for my services. So that comes as a current from his OBU account, offshore banking account. Maybe Standard Chartered Colombo, OBU. From there, the money can come, right? Transfer from diplomatic foreign currency account of a person resident outside Sri Lanka in respect of supply of goods and services. Yes, if you are supplying to diplomatic guy goods or services, in return he can pay you in foreign currency because he's a diplomatic guy. They are treated as a non-resident, so you can supply of goods could be paid by them in foreign currency. So that is again one of the defined credit category, right? Then payment received in foreign exchange by the account holder who is carrying permitted business under the duty-free concession. Yes, the people are permitted to arrival, departure. You have duty-free shops, so they cater to client arrival and departure foreign tourists. They sell commodities, different commodities, consumable, edible items, liquor. All these are sold at the duty-free. Electrical items. So their collection of sale proceeds can be, they are also eligible. Duty-free people are eligible. So those collection can come as to credit to their Pfc account under current transaction. So that is their routine businesses, current transaction. Where the account holder is an employer, transfer from the Pfc of the non-national or dual citizen of the employed in Sri Lanka employee being overpayment. Yes, As I told you, Lanka Hospital paid some overpayment. So it's coming as a credit to the Lanka Hospital account from the employee. So let's assume Lanka Hospital as a Pfc account, one of the doctor got overpaid and we want to refund that money. Right? So under Pfc also we learn. We can transfer to Pfca. So here the Pfca now we are learning it comes as a Pfca credit. So Lanka Hospital getting a credit from the doctor due to the overpayment made to the doctor as an employee. Right. Where the account holder is a company incorporated in Sri Lanka, which has arrangement within the overseas employer. Yes, I told you. Inward remittance distribution account. I think when you look at the business foreign currency account, it's a merger of under Exchange Control Act. There were 3 accounts. Pfca, foreign exchange journals account. Then inward remittance distribution account. Then we also say foreign currency account for agent of foreign shipping and airline. So these 3 accounts merge and Pfca came in under new act. So inward remittance distribution account is where a local company has the capabilities to act on behalf of a foreign employer who has the list of employees for which the employer has to pay the wages. Maybe some of the Sri Lankan maintaining LKR account, some of the Sri Lankan maintaining Pfc account, some of the people maintaining other foreign currency account, OBU, different types. So what will happen? A guy who has the capability of distributing salary, a company formed in Sri Lanka, can enter into a contract with the overseas employer, and the overseas employer will send him the money to distribute the salaries to the Pfc holder, rupee holder. So that is what, if you fully read it, you understand that. Where the account holder is a company incorporated in Sri Lanka, which has arrangement with the overseas employer for a disbursement of wages as earnings of Sri Lankan citizens who are rendering services outside Sri Lanka, remittance received in foreign exchange from the abroad through the banking system from the respective overseas employer to transfer from an account maintained in the OBU of the such employer. Yes, the employer maintaining OBU or is from overseas bank account, he can do the fund transfer to the Pfc account holder who will distribute salary. Let's say there is a company in Sri Lanka who provide this service. So they are getting $500,000 from a foreign employer. That foreign employer has a ship. A lot of Sri Lankans are working in the ship. So the foreign employer send the 500,000 to Sri Lankan, this particular company. It comes to their Pfc account. What they will do, they will distribute this entire 500,000 among the 100 employees who are employed in the ship as a crew member. The ship crew members are Sri Lankan. They might have a rupee account. They might have a personal foreign currency account. So accordingly, the salary will be distributed. Ultimately, whatever the service that he offer to the foreign employee, he get a fee. That fee will remain in the Pfc account, right? So that is the credit we are talking about here. So you got to understand Pfc account also catering to a special type of people who are distributing salaries on behalf of a foreign employer to the local employees of Sri Lanka, right? Then transfer from other Pfc or account maintain OBU in respect of supply of goods, services by the account holder being a category of person listed. So you know the category of Annexure 1. We saw 16 categories for people. If you can transfer whatever the respective 16 people can transfer to the Pfc account of the service provider to the service, whatever goods or services they render. Suppose say if I give you an example, you have listed 16 services people are there, right? So I am one of the importer of fabric, as I told you earlier. I have a Pfc account, right? There is other exporter who has direct exporter is into garment factory. I supply some material to it. So when I supply some raw material to him, he has to pay me in dollars, right? So the exporter and the indirect exporter both are listed in the annexure. In the annexure A, we saw both of them: exporter of goods indirect export, both are listed in there. So likewise, whoever categorized in the annexure list, when they deal with transaction under current transaction, the fund can be transferred. Simple as that, right? So here, as a BFC, I am getting the money to my BFC account getting credited by supplying raw material to the direct exporter. I am an indirect exporter. I import raw material selling to the garment factory. So the garment factory pay me in dollars for the supply of goods. I am transferring the raw material to him. They are in turn transferring equivalent amount in foreign currency to my BSC account. Because both parties are in the annexure A. So you got to understand, whoever listed in the annexure A, they can do current transaction within which they can transfer funds, right? Clear? Okay. Fund transfers. Transfer from a personal foreign currency account, BFC account, or offshore of the same account holder. Yes, we saw this under Pfc also, right? So from your Pfc account, as I told you earlier, one person can have a BFC, one person can have the Pfc, one person also can have a OBU account. So he can transfer from his Pfc account to his BFC account, or his OB account to the BFC account. Money can come, but it has to be the same account holder. It is I am maintain all three accounts. I can do. It is only I am same account holder. I have to maintain account in OBU. I have a PFC account. I have BFC account. So I have PFC, I have BFC, I have account in OBU. All three account I can transfer because I am the same account holder. I can transfer from different bank from these accounts to this account, right? That is, you learning under PFC, now you are learning under BFC. Remittance originating outside Sri Lanka. This is the amnesty. Section 8.3 of Foreign Exchange Act is amnesty. That is, people who are bringing more than $1 million, they have to pay 1% fee, for which the credit can come in. Once the amount is coming into their credit to their BFC account, they can bring the money here under amnesty provided under Foreign Exchange Act. So they need to pay 1% fee if the amount is exceeding $1 million. If not, they can bring the amount less than $1 million. That can come as a credit. No penalties imposed because these are undeclared funds detained abroad. The permissions are given them to bring back. No penalties. Only a remittance fee if the amount is exceed $1 million. If not, they can bring back, convert into rupee, or they can retain in foreign currency or BFC or PFC, whatever account they can retain. And they are also permitted to send the money out. Otherwise, those people will not bring the money. They should be given permission to send it out, right? Okay, so those are fund transfers. Permitted credit to shipping and general sales agent. This is general sales agent for airline, GSA and general sales agent. Shipping and both. Here, permitted credits, both shipping and airline. Where the account holder is a local shipping airline company, transfer from the PFC of citizens working abroad, employee, overpayment. Yes. Let's say a local shipping company made the payment to the PFC account holder by an oversight, they overpaid. So that PFC account holder repaying that. I think we saw it under PFCA. Overpayments are possible. So that comes as a credit back to the BFC of the shipping company because one of the employee got the overpaid, is refunding that. So these are refund. Overpayments are refund of salaries, wages, whatever payment overpaid can come back as a credit back to your BFC account. Where the account holder is a shipping agent, GSA in Sri Lanka, remitter received foreign exchange through the banking system on behalf of the foreign principal for the purpose of under the respective. So the shipping companies are working as a shipping agent always on behalf of a foreign principal. You know what is the shipping agents, what is their job, because each vessel when they are coming into our seawater, there should be agent who look after the procurement work. Because when a vessel comes, there will be containers the vessel brought in. Those containers will be unloaded, then distributed. Then the vessel will again travel back, or it will go back. So when they are going back, they can't go with empty vessel. So the agent collecting containers, putting into the same vessel. So Every vessel, when they coming here, every vessel has an agent in Sri Lanka. So those vessel owners are considered as a principal. They nominate an agent in Sri Lanka. So the agent offering a services to principal, therefore agent is eligible to open a Pfc account. Now the principal is sending money to the agent to look after the procurement work. So that is the credit. Where the account holder is a shipping agent or general sale agent in the event of airline. Remittance received from the banking channel from the respective principal or designated third party on behalf of the foreign principal for the purpose of so there is a agency agreement under which you are supposed to getting paid for the service that you offer. So the agent has to get the money because the agent is doing all the services. So there is a service agreement entered with the principal. There are certain amounts will be paid for the service. As per the agreement, the money can come from the foreign principal. That comes as a credit to the account, right? Then where the account holder is a shipping agent or GSA in Sri Lanka, the freight and passenger fare collected in foreign exchange by the agent on behalf of the foreign principal by yes. So when you are doing passenger collection, as I told you, you may arrange for containers to go. So the people exporters who are using the ship for export their containers, they will have to pay their freight fares, passenger freight and passenger collection. All that collection will come as a credit to the Pfc account because these are collection of their routine businesses. So shipping agent routing businesses is to freight forwarding airlines. So they collect passenger fee, they collect cargo fee. When they are containers, all that fee will be collected to their Pfc account because they do these services on behalf of the principal. So they collect all the money, right? It can be passengers, it can be cargo, right? So all that money can go into the Pfc of the shipping or GSA of the airlines, right? Foreign currency notes, yes. Foreign exchange accepted by the account holder in Sri Lanka and respect. Yes, as I told you, the Tambili seller selling Tambili, and you can accept to person resident outside Sri Lanka. Yeah, the foreigners who are temporary visit to Sri Lanka, they are person resident outside. They are not a resident. Huh? We learned afternoon. We learned residents are temporary people are not residents. They are non-residents, so they are living abroad, equal to living abroad. So when you sell somebody and earn them, it comes as a credit to you. Foreign currency notes. Foreign exchange bought into Sri Lanka by the account holder. Yeah, if you are a exporter, you sell something and bringing back, say, sometime if you are a gem and jewelry person, you are an exporter, you take gem and jewelry, you take part in the trade fairs, exhibition in other country, sell your gem, then you bring money, you declare at the customs. When you are taking the gems also, you have to declare at the customs because you are taking valuable out of the country. You need to declare. When you are bringing back the equivalent of money, you need to declare. So when you are bringing back your money, if it is more than 15,000, you know there is a declaration required. That is a requirement. Customs, when you are bringing in more than $15,000 or equivalent in other currency, you are supposed to declare at the customs. Then it's evidence it was brought into the country. It is not locally collected. That is the reason the declaration is in place. So anything less than 15,000, it has to be declaration to the authorized dealer. So you know the same theory we learn under Pfca. Some are same thing repeated because it's a different account. So we need to go through the same thing, right? Unutilized foreign currency obtained by the account holder debiting the Pfca. Unutilized foreign currency, you can put the currency back into your Pfca account if you have taken the Pfca account for travel purposes. Putting back as a credit. Yeah, your travel card, foreign travel card uploaded from the Pfca account funds. Now you have brought the card back, unutilized amounts are lying in the card. You can put the money back into your Pfca account, right? Unutilized amount in the travel card, put it back into the Pfca account. Any income or capital proceeds of any foreign assets account holder, where the assets Yeah, the business foreign currency account person can remit money outside Sri Lanka to acquire any assets. Now, currently, they are not permitted. Currently, for capital, there is a restriction. Other than that, earlier, other than the current restriction, BFC account holder can buy anything. They make an investment outside Sri Lanka, no problem. If they have made already any investment, that return can come as a credit to their account. Any income or capital proceeds, if they are holding any assets outside Sri Lanka, those proceeds can come into uh, debit to the credit to the BFCA, provided that original investment acquired by debiting. So always remember the correspondent leg should be there. You can't put the credit to the BFCA without investing out of the BFCA. So always remember, when something is coming to the BFCA as a credit, you should know whether the investment is gone also from the same account. Then only the other leg can come in. So you always make sure whenever investment realized proceeds from overseas coming into a particular account, in order to acquire that investment, whether the money also gone from the same account. So in the event, let's say a BFCA export company in Sri Lanka, they invested something in Bangladesh. Now they are selling that business. Now the money is coming. So when the money coming from Bangladesh as an investment, you have to look at it whether the investment also gone out of the Bangladesh from the BFC account to acquire the business in Bangladesh. Yes, it has debited and gone. There are other credit coming. So always the investment that is gone out of the BFCA can come back as a return to the BFCA, right? Okay. The transfer from an outward investment account being any income or capital proceed received from the outward investment where such investment had been, yes, you have been permitted to invest outside Sri Lanka by way of outward investment account, right? Buying shares, preference shares, debentures, unit trusts, corporate bonds, sovereign bonds, all that is possible. So if you want to invest on the OIA by debiting BFCA, if you transfer funds to OIA account, then whatever return, sale proceeds of those income, everything can come back to your BFC account. That is what you call income or capital. Whatever investment you made by debiting BFCA, transfer through OIA account can come back to your BFCA as a credit, provided you made investment through the BFC account. Transfer from an OIA of another person. Yes, this is directly you are selling your securities or asset to somebody. I think we learned that, right? And PFC also we learn. Now, as a buyer, here it comes as a credit. Let's say you have made some investment outside through an outward investment account. You have bought some shares, as I told you, maybe Apple or Samsung, whatever shares you bought. Now somebody interested in buying that shares, and that person has to open OIA to invest shares in overseas. That is a requirement. So from his OIA account, instead of sending outside, he is buying your shares. So what he will do, he open OIA and send the money to you because he is buying shares from you. So you are the seller. The account holder is selling his investment to the other local person. So that is the transfer here happening. So you can see transfer from an OIA of another person. He is the guy buying your shares. Being a proceed from the sale of a permitted investment in overseas. That is the shares, is the permitted investment. Right? Where the original investment, where you bought the Apple or Samsung shares by debiting the BFC account. So if you by debiting the BFC account, you are permitted to get the money back to your BFC account because the original investment made by your BFC account, or it could be OIA account. Both is possible by debiting your BFCA or OIA. Both are possible, right? Coupon or coupon income, sale, maturity proceeds, and any other related. If you are invested in Sri Lanka development bond, all the return can come back because you are invested out of your BFC account in Sri Lanka Development Bond, now returns income and the sale proceeds are coming in. So whatever interest paid to your balances also comes as a credit to your account under investment. Property developer. So where the account holder is a property developer, you know that he is also maintain a BSc account. Transfer of funds from the inward investment account of a person resident outside Sri Lanka, being a payment received the same. Yes, if a foreigner want to acquire immovable property, the property developer has a BFC account. The property developer sell that property to foreigner who makes the investment via inward investment account. From that inward investment account, the monies are transferred to the property developer's BFC account. The property developer maintain a BFC is selling apartment to foreigners. So foreigners can buy apartment. So we are going to learn whenever foreigners want to invest into Sri Lanka, they have to come through IIA account. They have to come through inward investment account. That is the account we will learn. If time permits, we will learn today. IIA, inward investment account. That is one of the investment account they can, that is the only investment account they have to channel through all their investment. They can't bypass the IIA and remit money to Sri Lanka. They will find difficulty to take the money back. So all the foreign investors want to invest into Sri Lanka, they have to come through IIA account. So if a person want to buy an apartment in Sri Lanka, he has to come through IIA. From his IIA, he can transfer directly to the sale property developer who has a BFC account. He is selling property. So that is the sale proceeds. Where the account holder is a property developer, transfer of funds from the foreign currency loan account. I think we learned that, right? We learned that. So banks giving loans to under Pfca. We saw that there are two type of account, for foreign currency loan account and LKR loan account. These two accounts are open when Sri Lankan bank offer loan facilities to PR people or dual citizen to acquire immovable property. So in that time, when the foreign currency account loans are given, if the property is acquired by the property developer who has the business foreign currency account, then what will happen? The person who borrows a loan from the bank to acquire the property, asking the bank to transfer from their foreign currency loan account to the BFC account for the return of the transfer of the property. So they are acquiring the property from the property developer. So the property developer can get the money from the loan account, where the bank is granting a loan to the borrower to acquire the property. So that is the transfer here we are talking about, foreign currency loan account. Right? Is that clear now? Property developer. Miscellaneous. Where the account holder is an insurance company regulated by the insurance. So the insurance companies also have been permitted to open. They also provide services to overseas, right? When they are designated the policies to overseas guys, and they are also permitted. Suppose where the account holder is an insurance company regulated by, it is not the IBSL, it is earlier Insurance Board of Sri Lanka. Now the insurance regulated body goes as IRCSL. What is IRCSL stand for? Insurance Regulatory Commission of Sri Lanka. Earlier it was IBSL, Institute of Bankers of Sri Lanka, also IBSL. Insurance Board of Sri Lanka, also IBSL. Now the names change. Insurance Board of Sri Lanka is no more. It goes as Insurance Regulatory Commission of Sri Lanka, IRCSL, right? So if that insurance company regulated by insurance premium received on foreign currency denominated insurance policy to eligible. So if these people sell eligible investors, now suppose as I told you, there are Sri Lankan who have taken a housing loan, employed abroad and taking housing loan, or people who have PR taking housing loan. So when you are taking housing loan, bank wanted them to take the mortgage policy, mortgage reducing policy, MRP. So that insurance premium need to be paid by the foreign people. These are non-residents. So they will have to take the policy in foreign currency. So they will pay the premium in foreign currency. Okay. So those premium will come, or there is other credit where these people will make a claim under the co-insurance. That proceeds also come as a credit to their business foreign currency account. So all together by way of premium, then then and co-insurers and claim received from the reinsurance. Sometime when there is a property insured and the insurance company, the property value is large, they reinsure with a foreign insurance company. In the event of a claim, the reinsuring company send the money to the local insurance company. So in that case, they are getting the money from the reinsurance company to honor the claim as a claim proceeds. So those money also can come as a credit to the insurance company's Pfca account. I think these are the permitted credit. So let us look at the permitted debits. So permitted debits, they are again I have categorized into current transaction, fund transfers, foreign currency notes, investment, repayment of loans, because we saw some loans are given, shipping and general sales. We always segregate that segment separately, miscellaneous. So let us see what are the permitted debits. Any outward remittances made outside Sri Lanka in respect of the account holder. Right. Any outward remittances made outside Sri Lanka in respect of the current transaction. Now remember, current transaction. Any current transaction you can do. Buying, importing, machinery, whatever services you want to pay, any fee, any services, any commodity, all that are current. So you can make any payment out of your Pfca account, right? So Pfca is permitted to make any current transaction. So always remember, current transaction do not have a limit. You can make any amount as far as there is a transaction for that value, right? So you can't say the current account transaction up to 1 million or 1. It can be 2 million. It's a current transaction, right? So it has to be proven it's related to goods or services, not an investment, not acquiring assets. Those are capital in nature. So the current is distinguished from capital by relating to goods and services is current. Whereas capital considered as movement of assets. The asset can be real assets or financial assets. You generally call it as a capital assets. Real assets are as real estate, property, immovable property. Financial assets are securities, shares, debentures, investment, treasury bill, treasury bond, whatever you name, huge investment portfolio. All that comes as an asset. Those are capital in nature. All what we are learning is current. It's related to goods and services, right? So that is how you define current and capital. Transfer to an account maintained in OBU of a person resident outside Sri Lanka. Yes, current transaction, you can do anything with OBU. Any person outside Sri Lanka, you can do a current transaction by paying him, by debiting him and paying him. So you got a service from a foreigner, you pay him. It's a service that it's a current transaction. So you debit and pay the service provider. A foreigner gave you advice, consultant fee, you pay him, right? So that is the current transaction. Where the account holder is an insurance company registered with the IRC, that is Insurance Regulatory Commission of Sri Lanka, payment of claim eligible customer and co-insurance in respect of foreign currency denominated policy premium. So you need to make a brokerage, you need to make a co-insurance payment, make the insurance. I told you when the assets are large, you need to make a register the co-insurer. So you reinsure that. So you need to pay the brokerage, you need to pay the insurance premium, you debit and pay. That's your current transaction, right? Brokerage, reinsurance, all that permitted. Where the account holder is a local shipping airline, transfer to the Pfc of the Sri Lankan citizen working abroad in vessels, aircraft owned by such wages. Yes, you make the wages. You are the shipping company. There are crew members working. You pay their salaries, right? That is the part and parcel of your current transaction, right? So you pay the wages to the crew members who are working in the company, shipping company, right? Current transaction continues where the account holder is insurance company registered with the payment claims eligible customers and co-insurance. I think we look at the same thing. Okay. I think that is repeated here. Where the account holders, first one, ignore it. Where the account holder is a company incorporated in Sri Lanka, which has the arrangement with the overseas employer for disbursement of wages. Yes. As I told you, now they are distributing the wages. As I told you, there's a company employed here as a distribution of salaries. They can make the distribution of salary once the foreign employer sends a bulk amount to the BFC account holder. The BFC account holder list of the crew members whom the salary need to be paid. So it can be rupee account, it can be foreign currency account. So the wages are distributed, right? So it can be rupee, Pfca, whatever the account, those salaries are paid. So that is debit again, right? Transfer to the Pfca, BFC account holder in the OB of the same account. Yes, same. You can transfer to your Pfca, BFCA, OBU in the same account. I think the payment permitted credit also you saw, permitted debit also, it has to be correspond, right? It's the same thing. Transfer to the other BFC or account maintained OB in respect of purchase of goods, obtaining services by the account holder, being a category of. Yes, category list of person. So you know the annexure 1, annexure 1, you saw the list of people under which both party can do a fund transfer by debiting and sending money for the supply of goods and services within that same category, right? Outward remittances, yeah, this is the amnesty clause. Section 8.3 is amnesty clause where if you are bringing the more than 1 million amount into the country, you are permitted to send the money out. So you can make outward remittances provided you brought the money as per the amnesty requirement. You are permitted to send the money again. So those money can be go back as outward remittance, fund transfer. Foreign currency notes, yes. Even BSC account holder for travel purposes, $5,000 are permitted. Or upload your fund transfer card, your foreign travel card, not fund transfer, foreign travel card. That is equal to your debit card now, right? So you can load the card if you want from your BFC account. Withdrawal of foreign currency note up to 50,000. Now this is special case. This is a special case where central bank given permission to the BFC account holder take $50,000. Look at the amount, 50,000 or equivalent in currency notes to a gem dealer, gem and jewelry dealer, to purpose of purchasing cut and polish or rough gemstones. So why this special permission given? Because gem and jewelry people, their nature of business, when they go for auction in countries like you have this Myanmar, you have these countries like South Africa, Zimbabwe, Myanmar, where the rough gemstones, the rough stones are sold at the unofficial auction. The auctions are used to, you have to add currency to pay and buy the stones. So gem and jewelry people has approached central bank and got a special permission. If they're having a foreign currency BFC account more than 50,000, they can take up to $50,000 to acquire, to buy these rough gems in the auction taking place in overseas. So, but there is a requirement. They have to be registered with National Gem and Jewelry Authority. They have to be registered and they have to get a confirmation from the buying some, they have to submit certain documentary evidence. Then they will give a permission, confirmation. Okay, we have checked this document and found in order. Gem and jewelry confirm. Okay, these people are permitted to be released $50,000. Based on that, bank can release 50,000 out of their BSC account in the form of currency notes. Remember, currency notes. So they have to go to the customs and declare it. They are taking $50,000. And when they are coming back with the stones, they have to go to the customs and reconcile how much stone, what is the valuation done. All that has to be there. So they have been specially permitted because of the nature of the business they are into. They need to carry hard currencies in order to purchase gems. Therefore, there's a special permission given to that segment, right? Investment, yes. As I told you, A BFC account holder can do anything earlier. Now, for him to do a capital transaction on his own name, it's not possible because there's a restriction up to $20,000. It is applicable to Pfca, applicable to BFCA as well. The owner of the account holder cannot make the capital transfer earlier, like freely. Now it has been reduced up to $20,000 because of the current foreign exchange issue, because we are short of foreign reserve. Therefore, remedial steps have been taken at the right time not to allow these amounts now. It's really not required at this moment. When you don't have money, what is the point of investing outside when we don't have money? When we have money, then remitting is okay. But when we don't have, so it's a right decision taken by central bank, not allowing any BFC holder to personally invest outside Sri Lanka any amount. So that has been reduced to $20,000 until further notice. So so this is, I think, every 6 months they are given. I think the further 6 months is given till July, I suppose. Then up to that time, we have to wait and see until further notice. Yes. So they can't take, as per the current regulation, more than 20. France in respect of making investment, Sri Lanka development bond in Sri Lanka, yes, they can make. These are within Sri Lanka, you can make investment. Transfer to OIA, another person, being a, yes, if you want to buy the shares, you can, now you are transferring money to OIAs. Now in the case of you are buying the shares, earlier you sold the share, now you are buying the shares. So you want to buy the shares. So what you do is, there is other person already bought the Google share or Microsoft or Apple shares, OIA account holder. Now you want to buy from me, buy from him. So as a BFC account holder, you are transferring funds to the OIA of the seller of the securities, being a payment for purchase of permitted investment. What are the permitted investment? Shares, preference shares, those securities, debentures, corporate bonds. So those are the investment opportunity which you can buy from the other outward investment. Where the account holder is an investee, tenant, lessee or buyer, transfer to IIA being a payment and income attributed to a capital transfer in Sri Lanka, such holder of the IIA. Where the account holder is an investee. Now I think when you are learning IIA, you better more clarity. I have told you there are people who can invest into Sri Lanka by bringing investment through IIA. So the IIA account holder can invest into shares of the business foreign currency account. The IIA account holder can invest in the BFCA company, in the equity. They can buy shares of the business foreign currency account company, the company, local company, export company. They are issue shares to foreigners, right? The foreigner can buy the local company share. Let's take Akbar Brothers, for example, or I'll take a quoted company, publicly quoted company. Let's say Alice is an export firm, and they have export arm, and one of the foreigners bought the Alice shares. Now Alice has a BFC account. Alice has to pay a return. Whatever income, all that money they have to pay back to the IIA account holder. That is the debit here. Where the account holder is an investee. Investee means investor made the investment in the Alice. Alice is the investee. Tenant, lease or buyer, transfer to IIA being the payment of any income or capital proceed attributed to the capital transaction in Sri Lanka of such holder of the IIA. The foreign investor made the investment in Alice. The Alice is supposed to return the investment with the income, with the dividends. All that payment can be made by debiting your BFC account of the Alice, right? Repayment of loans, yes. Transfer from external, I think you know, I don't know whether ECB I taught you, external commercial borrowing account is something where the local company can borrow from foreign lender. Local company can borrow from a foreign lender. So if this particular BFC holder has borrow some funds from overseas lender, then the overseas lender is generally reluctant to open an IIA. But actually, lending to Sri Lankan company also considered as an investment, right? So remember, if a foreign investor looking for lending into Sri Lanka, he has to come through IIA. But some of the lenders do not prefer to open IIA in Sri Lanka because they don't want to open in Sri Lanka. They don't want to open an account in Sri Lanka. But they can send the money. So what happened? Central Bank recently with this regulation introduced called external commercial borrowing account. It is open in the name of the company. It has to be borrower has to be a company, remember. It has to be incorporated company in Sri Lanka. Can be private or public, right? So that company can open external commercial borrowing. That funds can come from directly from the lender to the external commercial borrowing account. You borrow funds and utilize for your business, and you want to repay the loan. When you want to repay the loan, you transfer from your external commercial account. You transfer to your external commercial for you to repay the loan. So you transfer in order to whatever you borrow from overseas lender, you want to repay the loan, you transfer back to the external commercial borrower. I think we study this separately. Then debt servicing expenses and repayment of foreign currency accommodation obtained by the account holder, including transfer of funds. Yeah, you know the Pfca loan account. You have taken loan from the bank. I think there is a loan facility given like Pfca. You have two type of loans we need, housing loan and the employed abroad. Likewise, Pfca account holder also permitted to take a loan from the bank. Those loan need to be repaid. So you are debiting and paying them as a loan amount. So you have to repay the loan. I think today, I think from 20th November 2017 to the date of this direction date of the direction is now 22nd March 2022. I think Central Bank has given a period where if the Pfca company taken a loan from a foreign investor through the IIA account till that period, from 22nd March 2022, all the loan has to come to external commercial borrowing. Prior to that, whatever the loan you have taken, that is the reason they are given the time period, 20th November 2017 to the date of this direction. So put the date to the direction as 22nd March 2021. So you can, date of the direction what we are studying now, 22nd March 2021. During this period, whatever the loan you have taken from the foreign lender through the IIA, you can transfer back to IIA. You can repay the loan through IIA. So you have taken the money from the foreign investor through the IIA account, you can repay the money through the same channel, right? Whatever the loan you have taken, you can later repay, provided you have taken the loan during this period, November 20th, 2017 to 22nd March 2021. During this period, because after 22nd March, the loan has to be come through external commercial borrowing. That is a new change, right? So that is what that also put there. Shipping and general sale agents for airlines, both. Where the account holder is a local shipping airlines company working abroad in the vessels, yes. Airline employee, yes, you need to pay their wages. Airline crew members working as a crew member, you need to pay their Pfc account working abroad. So you can transfer their salaries, wages. Then where the account holder is a shipping agent GSA in Sri Lanka, yes, there is other $50,000 exemption given. One is for gem and jewelry, but in this case, when a vessel is aboard here, when a vessel is landed in Sri Lanka, sometime that shipping company who maintain a Pfc account can approach the bank and asking bank, because principal has sends money to the agent to pay the crew members salaries, because these people are sailing most of the time. When they are landing, maybe 1 or 2 months, the salary need to be paid. The captain might not have sufficient funds, right? They won't carry large amount of foreign currency with them, because whenever they reaches each destination, there will be agent. So what happened? What is the arrangement? The principal will send the bulk amount to the agent, asking the agent when the ship arrived, giving this amount to the captain to pay the wages to the crew members. So that is what we call cash to masters. There is underline the word cash to masters. So the cash to masters, central bank given special permission up to $50,000 currency notes. Bank can giving it to the shipping company in order to meet the cash requirement. Cash to master, that is to pay immediate liquidity requirement for the crew members in the vessel. Obviously, inward remittances would have come from the principal for that amount, right? So the bank has to verify before they debit 50,000 and giving it to the local shipping agent. They have to ensure corresponding 50,000 has come from the foreign principal. It would have come more than that because they are looking after all the administration work. This part of the money, this 50,000 also included in the bulk amount. So bank has to ensure before release 50,000 whether this particular vessel's principal has sent the money. That also you need to be ensured, right? This is how the special arrangement is done. So out of the Pfc account, there are two $50,000 currency note situation comes in. One is for gem and jewelry to buy rough gems, subject to confirmation of National Gem Authority. Here, bank has to ensure the principal has sent the money when the vessel arrived, cash to master to pay the immediate cash requirement for the liquidity purposes, right? Miscellaneous disbursement in Sri Lanka rupee. Yeah, all the disbursement done in Sri Lanka rupee. That's no doubt, right? Okay, fine. So this is the loan we are talking about. Foreign currency loan to Pfc holders. So there is a foreign currency loan to Pfc holders. With this last year changes, they also done a change. Earlier, central banks are giving credit loan proceeds directly to the Pfca account. So central bank said, no, you can't credit to their Pfca account as a loan proceeds. You have to create a separate account. That account is called, you can see, BLA, Pfc loan account. Earlier you learned Pfc loan account. Now Pfca loan account. So you saw that the person who employed abroad under Pfca loan account. Here Pfca loan account. So you can see the difference, PLA, BLA. That is Pfca loan account, this is Pfca loan account. Okay, to utilize for any purpose, yes, the money can be utilized for any purpose in Sri Lanka. Remember this word, to utilize for any purpose in Sri Lanka. If you don't know the regulation, the account holder said, I am taking a loan, I want to send money out. No, you can't do that. It has to be for permitted current transaction, to make payment in respect of current transaction of the borrower. So you can do all these things. It has to be permitted current. It is not an investment. You can't give a loan to somebody to make an investment outside Sri Lanka. It has to be a current transaction. You have to give the documentary evidence to prove it's a current transaction. There are goods or services involved, right? Otherwise, bank can't remit money. So, purpose of granting this loan for any purpose in Sri Lanka, or to make payment in respect of current transaction of the borrower, current transaction related to goods or services of the borrower. Yes. Accommodation shall be extended only to the holder of the Pfc, being the earners of. You have to ensure, bank has to ensure the loans are only giving to the Pfc holder who has the capability to repay the loan in foreign currency. Their earning capacity need to be carefully assessed. If they are unable to repay the loan in foreign currency, bank is in trouble. So the bank has to make sure every precaution, maximum efforts are taken to ensure the Pfc account holder has the generation of foreign currency inflows to repay the loans. That is the bank's obligation to ensure, right? There will be separate BLA account will be opened in the name of the borrower for the purpose of disbursing and receiving repayment. So you can credit the money. That money can be utilized for any purpose in Sri Lanka, or you can say export company took a loan from bank 100,000. The 100,000 loan will be granted to the Pfca loan account. They accredited the Pfca loan account in the name of the borrower. The 100,000 is there. Now he goes to the bank and tell them, I want out of 100,000, 75,000 to import my raw material. So that is the current transaction. No problem. So you can make the 75,000 to open LC to get the raw material. That is why the money is given, right? So that is possible. Current transaction. You are importing raw material for you to do the export order. And you are buying other patent right and other service payment to 5,000 to other country, all current. Or you are buying accessories from other company, all are current. All that payment can be made. All these are current because either you are buying a goods or services. That's all. So as far as you saw the document evidence, there is a service received, there is a goods coming into the country, all are current. So those payment can be made, right? So you can those money can be utilized for that purpose. So this is carefully listened. Now, additional carry out recovery of accommodation in Sri Lanka rupee as a last resort. Now, see, central bank categorically told you must ensure the loan is recovered in dollars. Sorry, in foreign currency, whatever the currency you give. It is not in LKR. It will be as a last resort. That means as a final option. There is no other alternative method. Then you can recover the loan in foreign currency. What is that level? So, where the necessary, when the recovery of such accommodation in foreign currency is remote, the chances of the loan situation could happen this way. Let's say due to the COVID, some people have borrowed foreign currency and they are unable to export. They lost the export market. Country who purchased those commodities are not purchasing anymore, or there is a delay in payment. So he is unable to repay the loan in foreign currency. Loan is in dollars. He has done the export, but unfortunately, the money has not turned out. It takes time. So the loan cannot be kept as open for more than a specific period. You have to, maybe 90 days maximum, right? You have to repay the loan. Maybe 1 year maximum bank can give, depending on the loan agreement, right? If the borrower unable to repay the loan, so the bank has to, no option, they have to take all the remedial action. As a final, chances are very remote. They have to get the document evidence that he is not getting any export proceeds anymore. Then converting that loan into rupee and recovering is possible. But that's to be necessary document evidence that they have to show. Otherwise, central bank will find fault with the authorized dealer. The bank, they are not done due diligence when granting loans. So that is the acquisition they can make on the bank. So the bank has to be ensure that they have taken care of that accommodation, right? Okay, now I think I don't think we won't be able to continue because it's now the time has almost, we have come to the end of the session. So we will have continuation of this plus some more slides with a new presentation. We will continue from there. There are some more questions to be tackled. So I will meet you on next Saturday, a continuation of this, because I have 80 slides I put together. I know for sure this cannot be done on a per day. We have to carry on with this. Probably next Saturday, we will complete this, getting into other areas, it's same relevant areas, right? So then see you in the next class then.